So I'm a little lost on that one. Joe Kidd, what's happening? Cam, Craig, what's happening? Caller Ceramics, Brian, Noel, VIG. Well, let's take a look at VIG because I'm a little bit in the dark on that one. I have no idea who VIG is, but let's take a look. VIG. Ah, well, there you go. VIG. Merry Christmas. How are you? I am tired. Holidays has a way of running me down. Okay? It is what it is. All right, so let's get to this. User 9464288022280. That's a weird name. What were your parents smoking when they named you? I always wondered that one. Anyway, let's take a look at VIG. Oh, check this out. This is what is called a monthly optionable stock. Monthly option. Not something that I like. But look at where it is, the chart. A year ago at 167, we hit a high at 205. We pulled back right here down to 195. Now we're sitting at 199. What does that mean? Well, I don't know. 199. Do you like it at 199? Look at the last 90 days. Last 90 days. Look at that movement. Up, down, up, down, up, down. Now she's going up again. Looks like she should, hypothetically, come up to the 205 area. So it looks like it could be a good play. I ain't going to do it. I don't do monthly optionable stocks. Monthly stocks just don't work for me. I like a safe, predictable, consistent 1% per week. Can I get that with a monthly optionable stock? Nope. Can't do it. I refuse to sit in front of my computer all day long. Can we see Macy's? Ooh, yes, let's take a look at Macy's. So you wanted to know the difference between VIG, okay, this is VIG, and SCHD. Let's try that one more time. SCHD. No difference whatsoever in my humble opinion. Monthly optionable stock, the other one was a monthly optionable stock. I don't do monthly optionable stocks. The only way you're going to get a weekly cash flow or a weekly profit on a company that does monthly options is to sit in front of your computer all day long and try to do it that way. It's not what I'm looking for. Simple, safe, predictable, consistent, 1% per week, weekly. I want weekly optional stocks. Monthlies, no thanks. Let's take a look at Macy's. Okay, Microsoft is right there, MSFT. Microsoft, take a look. Microsoft does have weekly options. What does that mean? Hey, Adam, mind doing some quick analysis on UPS? We'll take a look at UPS. Right now, we're taking a look at Microsoft. All right, now, I like weeklies because weeklies give me a predictable, consistent weekly cash flow. It means I can see it every single week. Okay, I can make a profit every single week. Why isn't the camera working on this one? Boggles my mind. Huh. Well, I guess we'll see what's happening. All right, well, that being said, let's take a quick look at Microsoft. A year ago, we were at 375. We jumped all the way up to 470, dropped back down. A lot of up and down. Look at the movement, predictable. Predictable, nice movement. I like it. It makes it easy. By seeing this, you know, hey, it's going to go up, it's going to go down. It's going to go up, it's going to go down. It's not, let's just say it's predictable. Nice moves. Okay, up, down, up, down, up, down. Cool. Let's look at the last 30 days. The last 30 days gives me an idea of where it's going to be next. Well, today's the 25th. Here's the 25th right here. Check out the last 30 days. Okay, dropped here, up, down, up, down. Well, now it should be going to the upside. Well, almost perfect if you think about it. Because I like a 2-day to the upside, a 2-day trend. Okay, see, here's your 30-day bottom here. let's go to the 30 days. Okay, here's your last 30 days. Okay, 30 days ago was the 30-day bottom. Okay, a couple of days ago, which was what, 1, 2, 3, 4, 5, 6, 2 weeks ago, here's the top. Down, now she's going up. 1 day, 2 days to the upside. I love 2 days to the upside when you find a new bottom right here. Okay, here's the high. She drops down. Now she's turning and going back up. That's what I'm looking for. Microsoft actually works. So let's take a look at what the options look like. Because right now, if I want to buy it first thing tomorrow morning, $440 is the current price. So what can I make off of that? Well, the 440 is going for $1.85. That's a 0.5%. No, thank you. Next week's 440 is going for 415 to 440, right at the 1% that we're looking for. So if you like Microsoft, now remember, never buy something you don't understand or you don't agree with. Well, Microsoft is one of those companies that have been around for a while. I mean, we've been hearing of Microsoft for the past 30, 40 years. Okay, they consistently increase their dividends every single year. So it kind of fits in the category of what we're looking for. So I'm going to write MSFT down. And we'll take a gander at that. Maybe it might be a good thing for tomorrow. Who knows? All right, what do we have next? Alex, how you doing? Tony? Lorene, Mass 1, Johnny K. Johnny K. Thoughts on Hershey's? Thinking of selling out of TGT. Ooh, Johnny, let's take a look at Hershey's. HSY. Interesting. I'd like to have some more thoughts on why you think Hershey's a good thing, but let's go. Let's take a look at the numbers. Hey, King, Merry Christmas. Jaden, how are you? All right, here you go. Look, a year ago, we're at 185. We shoot up to a little past 210, drop all the way down to the 166 area. Okay, what does that mean? Well, let's take a look at the last 90 days. Okay, here's what the last 90 days look like. Here's your high, here's your low. That's where it was, and this is where it is. Look, she drops, shoots up, pulls back. She might be bouncing right here. Well, that could be the bottom, because you can only have one bottom, and you can only have one top. Well, if your bottom was 2 days ago, looks like it was Monday. All right, here's your top. Last week, 2 weeks ago. Little over 207. And then she pulls back and bottomed out Friday. Okay, take a look at the last 30 days. The last 30 days gives us a good idea of where do we think it's going next. And that's what I'm looking for. I'm looking for a peek under the hood, a look behind the curtain. I want to take a look at the answer sheet. I want to know the odds and probabilities are in my favor. Okay, well, if the bottom's here, what usually happens at a bottom? After the bottom, there is usually accumulation, which means the stock price goes up. John, how are you doing? First time here. Glad you're touching on some important stuff. Well, alrighty then. Glad you're here. Welcome to the show. Let's get rolling. I don't know what's happening over there on Instagram. Apparently they're having a problem with the camera. Is what it is. All right, moving into Hershey's. All right, but you're moving out of Target. Why are you moving out of Target? TGT. Not quite sure why you're moving out of Target. Let's take a look at Target. Okay, here's your high of the year. Here's your low of the year. Here's where it was, way over here, and here's where it is now. Take your little finger and you trace it out. Shoots up, pulls back. Shoots up, pulls back. Now she's going back up again. She's currently at 132.86. The 133's not there, but next week, over 1%. Now, we're not going to get 1% this week. What do we got? 2 days, Thursday and Friday. All right, holiday in the middle of the week kind of messes things up. But if you like Target, which I like Target, I like to stay away from Target during earnings and dividends. Earnings, big huge gap up. Earnings, big huge gap down. Earnings, big, huge gap up. Earnings, big, huge gap down. I like to stay away from Target. But I do like Target as long as I'm not in it during the earnings period. All right, so let's take a look at the last 90 days. Sideways, big drop, up, sideways again. Look at the last 30 days. 30 days gives me a good idea of what's going on next. Now, when you switch to 30 days, watch this. When I go from 90 days to 30 days, huge difference. Huge. Okay? Bottom's right here, 126, shoots up to 138, drops back down, 2 days to the upside. Well, I don't know. Friday was not quite the bottom. Monday was higher, Tuesday was higher. This thing is definitely in an upward trend. Why would you want to get rid of Target at the moment? Look at the numbers on Target. The 132.86, the buying the 133s, 145. That's over 1%. Invest right. What are stocks to stay away from during their earnings and dividends, and how do you know? Well, you know by experience, okay? Now, I've been doing Target for the past few years. I got burned last year really bad with Target because I didn't know to stay away from Target during earnings. And when it gapped up, I'll show you. Okay. See this move here? On the 19th, she was at 156.65. Look at the very next day. She drops all the way down to 120. So it goes from 155 to 120. It lost $35 in one day. Overnight. Okay? I always tell people, you have a profit and you don't take it, don't be surprised if the market maker takes it away from you. Well, that's what happened here. Market maker got some news, he used that news, and he dropped the stock from 155 all the way down to 120. Okay? Yeah, big drop. So last year, it was at 110. I sold the 112 calls. Overnight, the thing jumped up to 126, jumped 16 points overnight, and I was at the wrong end. I think it was either 12 or 15,000 bucks I lost overnight. I didn't know what I know now. Now, if I knew then what I know now, I wouldn't have had that loss. But it's something you learn. Okay, you can't. It's either you follow someone who has been there, or you do it yourself, and then you learn. All right, we're at 50 people. We're going to reboot in about a couple of seconds. I'm going to answer the questions that are here, and then we're going to reboot. Yeah. Can't reverse the video. Oh, shit. Yeah, I'll do that one. It's stuck. I got that. WFC. Okay, we'll take a look at Wells Fargo. WFC. Are you day trading? No, I'm not day trading. I thought it was me. Nope, not you. Merry Christmas, everyone. Yep, all that fun stuff. All right, we're going to reboot. You need a better internet. Nothing coming through. Terribly sorry, dude. Let's reboot, and we'll go from there. All righty? So, that being said... Nope. No crypto. Why are you not day trading? Because I have better things to do with my time. Okay, I don't day trade. I don't like to sit in front of the computer. No, thank you. Okay, it is actually that plain and simple. Okay, I don't day trade. I don't want to sit in front of the computer. It's just what it is. How rich are you? I am comfortable. How's that? I think that's a polite way of saying it. I am comfortable. All right. And let's try to reboot and see what's going on there. I missed that question. Let's see what it was. A 5 million portfolio. Good for you. Day trading is dump when you can sell weekly options to make more money. Okay, now, see, I'm not quite sure what that means. CME, how you doing? Nekus, Joe, interesting. Devil Dog, ha ha ha. K-Dog, what's happening? Joe Wiggins. All right, we just rebooted. Let's see what happens, okay? Lost connection, that's not good. Okay, I don't know what's going on here. Paused poor connection. Do you have a $5 million portfolio? I'm Nice question. Tiki Taki. Ron M. Okay. Roger Man. What's happening? Wilson Irizarry. Okay. Mama Gals. Midnight. Rick. Henry Tito. Damon. Russell. Fry Rocket. Do you drive a Riv? What the hell would I want a Rivian truck for? I drive an old conversion van. I like my van. I've had it for years. I came up. What is the stock behind me? That is Target. I have this belief, okay? You can do 4. How are you doing? I have this belief if it ain't broke, don't fix it. Why would I get rid of a perfectly running vehicle and buy something else? Okay? It's good. Target, yes, I like Target. Target's a yes for me. It works for me. Bobby, Kindred Kid, Cheesy, John, Doug Richards. All right, let's keep on going. All right, next on the list, somebody wanted to take a look at JWN, which is Nordstrom's. I like Nordstrom's. JWN. I'm going to say I like Nordstrom's, but not today. Okay. Why Target? I like Target. That's probably the best reason I can come up with. All right, user 5589. Tesla, I don't do Tesla, but thank you for that anyway. Nordstrom's. Let's take a look. Here's our high. Here's our low. Here's where it was. Here's where it is. Look at that movement. Nice movement to the upside. 1, 2, 3, 4. We get 4, a 4-topper, which means it's not going any higher. Because if it didn't do it a couple of weeks ago, didn't do it a couple of months ago, what makes us think it's going to go above 25 now? It didn't do it before. Okay? It just kind of puttered out. All right. A year ago, we're at 1885. We bottomed out at 1661. Here's a shot up. Last 90 days. Look at this. Didn't hit 25, didn't hit 25, didn't hit 25. Tried 3 times, couldn't go over 25. What does that tell you? It tells you where we are now at 24, 21. It ain't going over 25. It tried 3 times. Okay, that's what you call resistance. Support's down the bottom where it doesn't go any lower. But resistance is when it doesn't go past a certain number. And that's what we're seeing right here at 25. 3 times over here, once here, and twice here. All right. Well, he teaches us weekly options and explains what he thinks is good and bad, and a really great teacher. Well, invest right. Thank you very much. Oh, okay, I will follow. U.S., thank you very much. So, you might like Nordstrom's, you might not. Okay, now, I like Nordstrom's, but not where we are today. Okay, take a look at the numbers. 30 days ago is the 30-day high. All right, I'll go over this side. 30 days ago is the 30-day high. She drops, here's the 30-day bottom. She goes up, pulls back, and tries to break through that high again, but it's not quite doing it. But see where we are? There's not much space between here and here. You could do it, but there's a lot more space between here and here. So once you get to a high, there's usually profit taken. What happens at profit taken? Well, the stocks drop. Do I want to jump into something where it's high probability of it dropping? I don't. Don't get me wrong. I like Nordstrom's, but not today. Hey, sir, can I put on Casper? I don't know who Casper is. Short selling. I don't do short selling either. Sorry. All right. That was Nordstrom's. Next on the list is MCAT. MKAT. I don't know who wanted to take a look at this, but can't find that symbol, so that's going to be a no. ADNT. That's a monthly. That's a no. Okay, I don't do monthly options. The numbers just don't work. Okay, I don't do cryptocurrency. Dividend stocks only until there is a proven method of getting a safe, predictable, consistent 1% or 2% every single week from cryptocurrency. I ain't touching it. Okay, if something works, don't fix it. Cryptocurrency's new kid on the block. You know what? It may be great. It may be something wonderful and new. But until there is a safe, predictable way of getting a cash flow from it, what's the point? You make 2% consistent a week. Now, I said I make 1% consistent a week. Don't forget UPS. Let's take out UPS right now. UPS. United Parcel Services. Let's take a look at UPS. Okay, UPS a year ago, 161. Then she drops down to 122, shoots up to 145, drops back down to 122. Well, let's see if now is a good time to jump in. Well, because I only want to hold it for 4 or 5 days. You know, jump in on Monday. FedEx. Take a look at FedEx. Okay, we'll take a look at FedEx. Alcoa. Somebody wants to look at Alcoa. All right, we'll take a look. Hold on, hold tight. AMC. Okay, yeah, sure. Hold on. AMC. We'll take a look. AMC. All right, right now we're working on UPS. So let's take a look. All right. Before we take a look into this charts, let's see what the numbers look like. 126.67. The closest strike price is going to be the 127s. Well, not this week, not next week. So I'm going to say no to UPS before we even do a deep dive in it. Because doing a deep dive into something we ain't going to do anyway, what's the point? Think about it. What's the point? I like UPS. I do. But are the numbers right? Is the numbers going to give us what we're looking for? Well, I'm looking for 1% for the week. I want to jump in and I want to jump out. Okay? Right now, we're at 126.26. It's at a bottom where she's bouncing up. Well, great. It's a great time to buy it. But it's not giving me the 1% I want. And there's too many other companies that will give me 1% every single week. Stream is freezing on TikTok. 86, I don't know what to tell you. Okay? Really, honestly, I don't. Hold on a second. Let me check my thingy here. Wi-Fi is connected. Okay, it says my Wi-Fi is connected. Okay, it says the Wi-Fi is connected and it seems to be working good. I sold put options at 135 on Robinhood this Friday. What do I think? Eddie, what's happening? Eddie, why would you do Robinhood? The company's only a few years old. How can you possibly get any decent read on the numbers? All right, let's take a look at Hood. All right, so you said you did a 135. I sold a put on Johnson & Johnson. Oh, J&J. At 135. Well, the 135 is only worth a penny. Are you sure that's right? Because the stock right now on Johnson & Johnson is 146. You said you sold the 135. 135, there's almost no value to it whatsoever. Not quite sure why you'd do that. All right, Eddie. Yeah, I get it. But look, the 135 on Robinhood for this week, garbage. Okay, 2 days. Next week, the 135s is only 5 cents. Well, look at where it is. She's in an upward trend, and she's sitting at 145. That's $10 in the money. Okay, invest right. We're going to take a look at AMD, even though it's not going to be on the list because they have no dividends. Okay, so Eddie, I'm not quite sure why you do the 135s, but hey, more power to you. Adam, what do you got here for me, Adam? I appreciate it. I just wanted to confirm this looks like a consolidation bottom. Great work on the channel. I'm very impressive. TA, I don't know what TA means. Um, even gotten into futures. Well, if you're into futures, dude, you really, really got to look into the Commitment of Traders report. Write that down. Check it out. Commitment of Technical Analysis. Thank you. I always think of something else. I think I got a dirty mind. Well, what it is? All right. Okay. So Johnson and Johnson. I don't know why you do the 135, but more power to you on that one. See, you're thinking the same thing. Somebody says TA, what's the first thing that comes to your mind? Well, technical analysis. Yeah, no. All right, let's go. Eddie, cool beans. Hope it works out for you. It makes sense. I mean, think about it. It makes sense. I mean, the stock is at 146 and it's in an upward trend. You sell the 135, that's kind of like free money. Okay, who's going to make you buy it at 135 when it's currently at FedEx US? FedEx is on the list. We wrote it down. We're going to take a look at it. All right, let's keep on keeping on. Keep on keeping on. Next on the list, MU, Micron. I like Micron, some nice numbers. Hopefully you got a good premium for it. I hope you got a good premium too. I mean, it's $10 in the money. I mean, $10 in the money on Johnson and Johnson. And you got to see 135 this week. MU. All right, MU. Here we go. Micron. Ooh, what's the big drop from? Let's check that out. Look at this big drop right here. I'm curious. Okay. A year ago, 85. We jumped up to 155. Dropped back down to 85. Okay, all your whole year is gone. Look, a year ago, we're here. Guess what? We're back here again. She shot up, she pulled back. Do I invest in VOO? Jimmy, you are new here, dude. You know how I know that you are new here? Because you're asking me about VOO. So we're going to take a look at VOO, Jim. Don't go away anywhere. And I'm going to tell you exactly what my opinion is. And I want to see just how educated you are with the VOO. What is VOO? Daddy, hold on. We're going to take a look at that in a second. Seriously, we are. Jimmy, I feel a little bad for you because I'm going to pick on you about that VOO crap. Okay? Hold on. Let's keep on keeping on. So we're on MU. After MU, we're going to do VOO. I got a couple of people asking for it. You're not going to be happy with it. Seriously, you aren't. VOO, S&P 500 thing. Yeah, I get that. I know what it is. Okay, he's asking me my opinion on it. He wants to know if I invest in it. Yeah, from Vanguard. Yeah, I know what VOO is. We're going to do a quick little rundown on it as soon as I'm done finishing up with Micron. Micron, MU. Let's do one thing at a time. Micron, 56. Shit. All right. Let's look at the last 30 days. Okay, a year ago we're at 85. We jumped all the way up to 157. Dropped back down, retraced, went sideways. Now we're back down in the 85, 89 area. All right. Well, we had a gap down last week from 110 all the way down to 88 to 86. Okay, that's 14 points, something like that. Wait, 110, 20, 24 points, $24 drop. $24 drop on a 110 stock, that's over 20%. A 20% drop on Micron. Why? Okay, hits the bottom on Thursday. Sorry, on Friday. Here's the bottom, Friday. Monday was higher. Tuesday just kind of went sideways. Not quite sure where it's going. Okay, Sal, I don't do Tesla. Okay, the name of the show here is Dividend Stock Talk. Dividend being the key word there. Tesla doesn't have dividends. I don't do Tesla. Any company, no dividends, no thank you. Okay? So, Micron, I'm kind of curious what happened here. I'm going to give it a little bit more time to see what happens. Because the bottom was Friday. Monday was higher. Tuesday was higher, but not in an uptrend, just higher. All right, anyway. Jimmy, let's take a look at VOO. Okay, now VOO does have weekly options. Okay, good. Okay, I have UPS shares. Good dividend. Okay. No dividend, no thank you. Cool. All right, so, Jimmy, here we go. Nice movement to the upside. Okay, nice. I like that. Now, what about Google? Luke, same thing. Google just started paying dividends. What do they got, 2 years? Okay, now I understand Google's been around for a while, but they don't share their profits. They've only just begun. All right, so I like 20 years of consistent profits. There's no way you get 20 years of consistent profits with a company who's only sharing their profits for 2 years. Okay, no consistency there whatsoever. 2 years is not enough. All right, VOO, here we go. Now, it looks good. Look at the movement. Okay, great. Well, number one, it's 550 bucks. A little out of my price range. I like to stay below 250. But okay, I understand some people have more money than I do, and they can do $500 a share. Great. So let's jump on over to Yahoo Finance. Okay, and we're going to put in VOO. Now, why am I over at Yahoo Finance? If you cannot read these numbers here, this screen behind me is live on YouTube. You know, The 10-Minute Trader on YouTube. You can see the screen. You can be able to see the numbers better. Now, VOO. Let's check out how wonderful they are with their dividends and how well they increase every single year. All right, first of all, I want to look at all the dividends. I want all the way back to 2000. That's 20 years. Okay, I want 20 years of increased profits. Well, VOO only has dividends to 2010. Okay, that's a problem right there. 14 years. Okay, I like 20 years, Jim. 20. Okay, there's 9,797 different companies I can choose from. This one doesn't have consistent profits. I like consistent profits. Why 20, not 14? You have a date of 14-year-old? Doesn't go over very well. 20? Yeah, that works. I just want consistent profits. That's it. 20 years or more. There's 9,797 different companies you can choose from. There's over 300 that have increased their dividends every single year for 20 years or more. Why would I want to do one that's only been for 14 years? Okay, 20 years of consistent profits is a lot better. But wait a second. Hold on. Just because it's 14 years of dividends doesn't mean they increase every year. No. The interesting thing about a dividend is a portion of the profits the company shares with its investors. Okay, so let's see how good VOO increases its dividends. Now, very first dividend, September 24, 2010, 56 cents. Okay, that's the very first dividend. Look at the very second one, 53. Why the hell are they going backwards? Aren't profits supposed to increase, not decrease? Why is it decreasing? But wait, it gets worse. Hold on. So it goes 56, 53, backwards. 54, 57, 58, 69, 57, backwards. So twice it went backwards. 64, 69, 94, 67, backwards 3 times. 74, 79, 91, 78, backwards. 81, 88, 98, 90, backwards. 95, backwards again. 109, 101, backwards again. 95, backwards again. 88, backwards again. 130, 100, backwards again. 101, 118. 108 backwards, 116, 121, 129, 146, 139 backwards, 130 backwards, 143, 118 backwards, 143, 131 backwards. Do you see what I'm getting here, Jim? Okay, 2 steps forward, 1 step back. 3 steps forward, 2 steps back. They're not consistently profitable. Why is it that you would invest your money into a company that is not consistently profitable? There's over 300 companies that are consistently profitable. And can I get 1% every single week on VOO? Well, let's check. Okay, currently we're at 552. The 553s, 552, we're getting 370 to 440 for over a week out. That's more than a week, and it's not giving me 1%. I am looking for a simple, safe, predictable, consistent 1% per week. VOO is not giving it to me. But even worse, VOO is not consistently profitable. Their profits are not consistently increasing. So Jimmy, I ask you, what the hell are you thinking investing in VOO? Seriously, if it's not consistently profitable, why would you put your money there? Okay, but wait a second. Let's see if it gets worse, because I haven't checked this one in a while. So let's go back to Yahoo Finance, and we're going to come over here to the summary. And the summary is going to give me what is called the current yield. What is that? Well, if I invest my money into it, what kind of return would I be expecting to get? Well, look at this, Jimbo. 1.22% for the year. Let me repeat that. 1.22%. CDs are paying better than that. The federal government bonds are paying better than that. Seriously, Jim, why are you putting your money in at 1.22% per year? You can put it into a bank and get better than that. High yield savings account are giving around 4%, and you're going at 1.22. My answer is hell no with VOO. He's going to explain why VOO goes backwards. I'm not explaining why. I'm just showing. See, I don't give my opinion. I don't give advice on anything. I just give my opinion. I read the data. The data tells me if I invest my money, okay, in VOO, what kind of rate of return, what kind of yield am I getting? 1.22% yield on VOO. The dividends, they go up, they go down, they go up, they go down. A company that is consistently profitable, if the dividend is a portion of the profits, okay, whatever portion it is, 1%, 2%, 5%, whatever portion the dividends is, if it increases consistently, well, that means the profits are increasing. Oh, look at the other way. If the profits are increasing, well, the dividends are going to increase because it's worked into the algorithm. If we make this much money, the investors are going to get this much. And as we make more, the investors get more. That's the whole purpose of investing in the first place. You give your money to someone who is doing a good job. And there are a shitload of someones out there doing a better job than VOO. Just my humble opinion. Okay? So let's get out of that one. And let's see what kind of what questions did I miss here? Good point, good point. And that's per stock. Yep, it is. James, a stock you would long term? No, I would not buy that one long term. I wouldn't even buy that one short term. What can you give an opinion on it? Okay, cool. All right. So anyway, Jimmy, that's my opinion on VOO. What else fits in there? SCHD, VIM. There's a whole shitload of stocks that the powers that be, Vanguard, those are one of the powers that be. They got a shitload of money. What are they doing? They're trying to ram shit down your throat that tastes and looks and smells like shit. What stock would you buy, James, long term? Okay, I don't buy anything long term. Okay, I'm at the point in my life where I know for a fact I'm not going to live forever. Okay, I want consistent, safe, simple, consistent, predictable cash flow on a weekly basis. Okay, now, I understand that a lot of you still in the workforce, a lot of you still working, okay, but at some point in time, you are going to retire. Where is your income going to come from? Okay, are you going to take your money, put it into a stock and wait 5 or 10 years? No, because you need the cash flow. I need the cash flow. I'm retired. Okay, I don't recommend anything. I take a look at numbers. I give you my opinion. That's it. Okay, VOO, hell no. But that's me. If it works for you, great. Because a lot of people like it. Holy shit, we got 99 questions. All righty. Mickey, you're back. Oh my goodness. Jacob Sullivan, how you doing? Loving life. Let's go Mets. Holy shit. Worst investment advice ever. Mickey, I love it when you give me those kind of wonderful tidbits of information. Okay, Mickey, I'm going to ask your humble opinion. Okay? Okay, Mickey, ILMTWMA. All right, cool. Worst advice ever. Wonderful. Great. I'm loving to hear some of yours. You tell me. Simple, safe, predictable, consistent, 1% a week. What investment strategy do you have that in order to achieve 50% or more per year consistently? Not capital appreciation, cash flow. That's what I'm looking for, Mickey. This is like the third or fourth time you came on here and said I give terrible advice. I'm not giving advice, I'm giving you my opinion. Okay, I'm showing you, I'm actually showing you what I do. I show you my trades. I actually, every single trade that I have, capital appreciation is. Okay, see, Mickey, you're in a different point in your life. I told you time and time again, I'm not looking for capital appreciation. I have no desire whatsoever, and this is the part you're not grasping. I have no desire to take a chunk of my money, put it someplace and watch it. Doesn't work for me. I need cash flow because I'm retired. My money has to come from somewhere. And I tell you one thing, it ain't coming from Social Security. Okay? If you think you're going to retire in monthly income from Social Security or whatever you're getting on your investments, hey, that works for you. It doesn't work for me. You don't like it, you don't need to be here. If you're here, have something positive to say. If you have a good strategy, let's hear it. This is just my strategy that I'm sharing. I created it for my 9-year-old daughter. It averages 1% per week or more. That's over 50% per year. You keep coming on here and you keep bashing it, but you don't give me anything that's, anything to rebuttal. Do you even have anything good to say? I doubt you have anything. Bito, no. No comments, huh, Mickey? Yeah, figures. Jimmy, you like that one? So you never let it run to 7, 8, 20. No, I don't. I wanted to know what's your portfolio. My portfolio is very I have 6 different accounts. I share publicly 3 of them. Okay, 3 of them is none of your damn business. 3 of them I share with you. I actually show you every single trade that I make. Where is it? Right there. Okay, here's all my trades right here. Okay, click on any one of them. Okay, and it'll tell you exactly what they are. What do we got? Yeah, I earn 1% and I leave. Q, no, don't do those. Okay, Dell, Dell, Walgreens, Ford, MPW, Intel, Macy's. They're all right there. Here's the timestamp. Okay, here's how many I bought or sold. Okay, here's the call options. This is the premiums I collected. Add them up yourself. Do the simple math. Add, subtract, Okay, the red's are sold. Green is buy, red is sold. It's not wins, losses. It's bought, sold. Okay? Collected a premium, 120 per share, 50 cents per share, 2 cents per share, 1 cent per share, 32 cents per share, 32 cents per share. That's per share. That's how much I profit for each one. Red is sold, green is bought. It's not negative, positive. What buy order, hold on a second. What buy order would buy Ford and sell Ford? Okay, hold on a second. Ford. Ford was just a sell. I sold the 1050 options, got 2 cents per share, nothing major. Ford. Here it is right here, Ford. Okay, 700 shares at $10.99. Okay, see that price right there? Okay, no. Okay. I bought 700 shares of Ford at $10.99. I sold the $11 call strike at 17 cents. That's over 1%. Where do you see this? Your website link is in bio. Yes, that is correct. The website link is in the bio. It is in right here. The 10-minute trader, okay? You do some research. Seriously, how long have I owned the 10-minute trader website? Close to 20 years. All right, slide all the way down. See, right here. Current trades for 2024. I haven't updated that one. View all. View all takes you to all the trades I did this year, and they're all there. Okay, I haven't posted these ones yet. I'll get week 44, 45. Yeah, that's what I got to do tomorrow. Okay, all right, let's get out of there. Let's get back to where we were. So anyway, Mikey, I'm waiting to hear from you, Mikey, the crazy uncle. On your opinion, options expiring more than 1 week, options the same in outstanding? No, 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 no. That's day trading. Okay, I buy a stock on Monday. I sell a covered call or a call option on Monday. Okay, I buy and sell the stock and the option at the exact same time. They expire on Friday. Okay, if it's in the money, great. I get all my money back plus the premium. If it doesn't, I carry it until next week, but I still collect the premium. The premium is what I'm looking for, 1% every week. You do limit orders? Sometimes I do market orders to jump in. Frankenstein, covered call. What is the minimum amount of shares per contract? 100 is usually what I see you do. Smart, thank you, Sal. Thank you for sharing and helping. Thank you, you're welcome. So Frankenstein, it just so happens, okay, it's not that I'm looking for a certain price range. No, it just so happens to happen that way. First order you talked about, what is it called? You got to be a little bit better than that because I've been on since 9 o'clock. It is now 9:57. I think the first one I looked at today was Pfizer, I think. I'm not sure. So anyway, Frankenstein. Okay, I like stocks $250 below. Some I buy are $5, $6, $7, $9. Some of them are all the way up to $150 to $200. All right, Grasshopper, thank you for that. All right, so let's keep on going. Got a lot more questions to go through. I noticed Mikey just disappeared. Comes in, takes a dump, and then leaves. No opinion whatsoever. Lindarella, which one's looking good for Monday? Ooh. No comments on Mikey, huh? Unlock your success. Is stock open tomorrow? Yes, it is. Uh-oh. Sal, what do I think about Archer and JOBY? Uh-oh. Archer and JOBY. Okay, you really got to tell me what is the stock symbol for Archer, because they're usually 3 to 5 symbols, not, however many Archer is. Let's keep on going. Do I pay taxes on dividend income? User 10217890. You really got to ask that question to a tax strategist, or a tax planner, someone that will help you. Oh, hell no, Grasshopper. Oh, Realty, you're new here, I can tell. Nobody who's been here for more than 3 or 4 times ever asks me about O Realty. O is a big fat no. It's wet. I'm not quite sure what wet means in the context here. So, user 1021, blah, blah, blah. Okay, taxes to a tax strategist. Okay, how you hold your account, where your trading is done from, totally up to you on how you pay taxes. You hold it in your personal name, big mistake. You're open to lawsuits, you're open to litigate. Hoping my Kohl's and Macy's will get called away this week. Got a feeling the stock will run next few days. Cool beans. I like Kohl's and I like Macy's. We'll take a look at Kohl's. We already looked at Macy's a little while ago. So again, if you hold your account in your personal name, you're going to pay the highest in taxes. You hold it in a company name, ARCH. I'll take a look at it. Can't promise you anything because I've never heard of it. If I've never heard of it means usually it's going to be a no, because I like companies that are consistently profitable. Coca-Cola, Bulldog, huh? Coca-Cola, KO. We'll take a gander. So anyway, if you hold your account in your personal name, you're going to pay the highest taxes. You hold it in the LLC, you pay the amount of taxes from the LLC, but the LLC is allowed to take losses against the profits. If you hold it into a C corporation or an S corporation, you can put it into the pension fund department of that, which could be offset taxes, which means you have to pay taxes until the money's taken out. Kind of like a Roth IRA. You don't have to pay taxes on that until you take the money out. Okay? But if you put it into a trust, or if you put it into Key or GS, Goldman Sachs? Key, hold on, or GS. Oh, probably not going to be able to get to it today. I'm only on until 11:30. If you already guys got me taking a look at 20 different companies. Okay? So, depending on how you hold your trading, that's going to depend on how much taxes or if you pay any taxes. All right? Hopefully that answered that question. Velvet Cheeks. Interesting name. You got to give me the ticker symbol for that. I've never heard of that company, but okay. Where the hell did Mikey go? Figures Mikey came and left. Oh, you're always going to have people like that. All right, Carl, how you doing? Susan? TD, what's happening? Watu, cool, interesting name. Mike Richards, how you doing? Cammy, how are you on the nights like this? How are you on nights like this? It's what, Wednesday? All right, Sal, Archer is 47% up, 250% past 3 months, 78% for the year. Not quite sure what all that means, but let's take a look, okay? You asked nicely, ARCH. Hell no. Sorry, Sal, I don't do monthlies. The numbers just don't work. And I'm not quite sure how you mean Archer is up 47% and 257 for the past 3 months. Okay, am I looking at the same thing, ARCH? Okay, a year ago we're at 170. She jumps up to 190. That's only a $20 increase. Okay, $20 on a $170 stock, that's 12% maybe. And then she drops from 190 down to 115. Well, that's an $75 drop. $75 on a 190. Holy shit, that's like 40, 50%. And then she jumps up from the bottom, 115 to 175. That's a $60 hike. That's a 50% hike. I don't know where you're getting 250 because from 115 back in August and September, she jumps up to 180. So 115 to 180 is only a $60 increase. And a $60 increase when she's down here at 120, well, 60 bucks on a $120 stock is a 50% jump. It's only a 50% jump. And then from 180 down to 138, that's a $40 drop. A $40 drop on a $180 stock, somewhere around 20-something%. So your numbers are incorrect there, dude. Okay, and that's not 78% for the year. A year ago, it was at 170. It's at 138 at the moment. So I don't know where you're getting your math from, Sal. But a year ago at 170 and now we're at 138, that's backwards, dude. Okay? That is not an increase. That's a decrease. From 170 down to 38, that's 35, 30, 33. 33 bucks down. 33 bucks on a $170 stock is about 20%. It's a 20% drop from last year. It's at 138 right now. A year ago it was at 170. Dude, that's backwards. That's not increasing. Okay? And I don't do monthly, so it would never make my list anyway. So, terribly sorry to pee on your parade there, dude. But you're looking at the numbers incorrectly. Either that or I'm looking at the numbers correctly. No! Santa was good to all. What about AMC? Okay, AMC I don't really like, Advanced Micro Devices, because they got caught with their pants down cooking the books, okay, a while ago, and they don't have dividends, so it's going to be a no. Steve Tucker, 63%. I'm not quite sure. Merry Christmas, folks. Got some rolls decked out for... Okay, Steve, I'm not quite sure what you're talking about here, Mr. Steve. Reading from Robinhood Platform. Reading from the bottom one says 1 month, 3 months. Yeah, I get that. Why is Archer at 1080 for me? 1080? Are we looking at the right Archer? You said ARCH. ARCH. Arch Research Incorporated. Okay, that's the ticker symbol you gave me. ACHR. Oh, huge difference, dude. ACHR and ARCH, two totally different companies. ACHR. Okay, hold on. ACHR. Archer Aviation. There you go. Dude, huge difference. ARCH and ACHR. Okay? You gave me ARCH and it was okay. Anyway, here we go. ACHR. Okay? Sell? Yeah. Okay, so now look at the numbers. All right, a year ago we were at 650. Okay? Now we're at 1080. Okay, so 650 to 1080, that is about a 60% increase. Okay, from here to there. That's about 60%. Okay. But look, it was in October. It was at $3 in October. Now look where it is. It's at 1080. Now, I'm not quite sure, but I really don't think this is going to fit. ACHR. Okay, now it does have weekly options. Okay, but it has no dividends. So right there, it's going to be a no. Sorry. No. Because I don't do companies that don't have dividends. The reason why I like dividend stocks is because a dividend stock is a company that shares its profits. Why would I put my money into a company that doesn't share profits? That's capital appreciation. That means I'm going to put my money into something and I'm going to watch it and watch it and watch it. That's not what I'm needing. Yeah, I get that. I understand what you're saying. Okay? Seriously, I do. That's not what I'm doing here. Okay? You're definitely in the wrong place because I don't do capital appreciation because this does nothing for me. It doesn't give me weekly cash flow. And if it doesn't have profits, well, how do I know if it's profitable? You actually want me to look at all the quarterly reports and read all those reports? It's easier just to take a look at the dividend. And if it's not paying a dividend, well, then I have to go in and I have to look. See, well, when does this company usually move? Because with a dividend stock, we look at the calendar. Let's get rid of this. Let's get rid of that. Okay. Each one of these little green dots represents a company that's getting ready to pay a dividend. Okay, it's a lot of them. Now, the ones that say black, they don't see anything. Well, there's 140 companies. They can't fit them all there. Okay? There's nothing on the 20th, nothing on the 28th, which is kind of weird. One here, one here. Okay, anyway, each one of these represents a dividend date, which is when the company pays their dividend. Great. Why is that important to me? Well, I've been doing this for 20 years, and I know that most companies, not every single one, but most companies, especially the ones that I do, have a tendency to go up in value before they pay their dividend. So if Caterpillar, Colgate-Palmolive, okay, Caterpillar and Colgate-Palmolive have their dividend on the 21st of January, see, January 21st, I want to buy it 2 weeks in advance. Why? Because 2 weeks before the dividend, the stock has a tendency to go up in value. And knowing when a company is going to increase in value based on historical performance, because it did it 10 years in a row, so most likely it's going to do it again. Okay, by knowing when it's going to move, great. Now what trading strategy do I use? Do I buy the stock and wait for the appreciation? I already told you that's not what I'm looking for. I'm looking for consistent, predictable cash flow. So I do what's called a covered call. A covered call means I buy the stock and I sell it to somebody else at the exact same price I just paid for it. And then I collect the premium. The premium is what gives me the 1%. Now, what does the stock have to do? Stay the exact same. Just stay right where it is or go up and I'm good. Stocks only go 3 directions. It goes up, it goes down, or it goes flat or sideways. So if I'm making money flat or up, that's 2 directions. 2 out of 3 ain't bad. That was Meatloaf, right? 2 out of 3 ain't bad, you know what I mean? If I can stack the odds and probabilities in my favor, great. So if I'm buying it 2 weeks before the dividend, okay, right? All I want the stock to do is stay where it is or go up, and then I'm making my 1%. It only goes 3 directions, up, down, or sideways. So if I'm doing a strategy where I get paid 1%, if a stock does absolutely nothing, great. If it goes up, I'm still getting my 1%. If it goes down, well, I bought a good company that increases its dividends. Now, the reason why I want increased dividends, because in the absolute worst case scenario, if the stock drops, okay, if the stock goes up, down, up, down, up, down, up, down, up, down, up, down, up, down. If and when the stocks go down, I'm at least guaranteed. Thoughts on NEO? NEO's a no. NEO stocks, forgot my first one. Yeah, okay. I don't think NEO has weekly options either. Okay. Uh-oh, here's a big one. Troy, my mom got me new shoes for Christmas, and when I opened the box, I said I wanted black ones, not brown, and she beat me over the head with the box, then went to my room and dropped acid. What should I do? Take another hit, acid. Dude, seriously, you're unhappy with your mom because your shoes were brown and not black? I can go get some spray paint, $1.98 at the store. I can spray them black. Best YouTube channel. Thanks, Adam. Be grateful for what you have. Okay? You can be a person who's consistently bitching and moaning about all the gifts you get that you don't want. There's some people in the world that don't get anything. All right? Quit your bitching. Be grateful. I want to learn more about, okay, well, sit, chill, relax. I'm here every night, 9 p.m. However, the beginning of the year, I'm going to change my schedule. Spray paint, that's madness. Well, then just take the fucking brown shoes. You don't want brown shoes? Take them back, get black. You don't want to do that? Go get some spray paint and spray them. Paint them. Whatever. All right, let's keep on moving. Keep on moving forward. What do I think about General Motors? Lindarella, cool. TSCO. TSCO. There's fabric call. Yes, there is. I still don't understand how you get dividend paid out. Hold on, US. TSCO. I don't think I've heard of that one, but hold on a second. I still don't understand how you get dividend paid out if you keep the stocks for a week. Okay, US, I'm not quite sure where you get the impression that I get the dividend. I don't want the dividend. I use the dividend in the calendar. Okay, I use the dividend as an indicator to tell me when is the stock going to pay its dividend. Because when it pays its dividend just before, see right here, Caterpillar on the 21st of January, they're going to pay a dividend. Okay, the dividend is $1.41 per share. Okay, great. Now, knowing the dividend is $1.41 per share, everybody knows. Everybody who wants to know something about Caterpillar is going to know they pay the dividend on the 21st. So whoever owns the stock on the 21st is entitled to that dividend. Great. I don't want the dividend. Seriously, I don't. Okay? I want to buy the stock on the 6th. At the beginning of the day, the opening price of the day, sell an option against it at the opening price of the day, collect my 1%. What does the stock have to do? It's got to stay the exact same or go up. It only goes 3 directions. Okay? Stay the same or go up. 2 out of 3 in my favor. Now, I don't want to buy options. I want to sell options. 80% of all options expire worthless. Why do I want to buy if 20% win and 80% lose? I want to sell. I want to be part of the 80% crew. I want to sell my options, and I want to do it 2 weeks before, because if I know the stock usually, not guaranteed, usually goes up before the EX date, before the 21st, I want to sell an option. That way I get 2 parts going for me. They got the dividend coming up, great. They got the, what do you call it? Stocks usually go up before the dividend. Now I know when. A covered call is the simplest, safest trading strategy there is. You buy the stock, you sell somebody the rights to buy it from you for the same amount of money you just paid for it. You collected the premium. The premium is more than 1%. That's 1% every single week. 1% a week is over 50% per year. Now, explain to me or tell me, what is another trading strategy that is safe, predictable, consistent, and gets about 1% every week or 50% per year? If I can do it one time a month and get 50% a year, I'm all for it. What trading strategy is it? How simple, easy, and safe is it? That's a fair question. There's a couple hundred people here in the audience. Somebody's got to know. If you know a trading strategy that is safe, predictable, consistent, and easy, it's got to be easy. Simple, safe, predictable, consistent. I created this strategy for my 9-year-old daughter. For those of you that are new here, let's check her out. Okay, let's go right here. Now, for those of you who have never met the princess, go back to videos, go back to the oldest videos, and here she is.
As you being part of my internet website called
Whoops.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the.
That's me 15 years ago.
21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Every single day there is a different company paying out dividends. Anyway.
It makes me laugh every time I see that. It also makes me sad every time I see it. You see how much hair I had back then? Nice, deep, dark brown. And I got this salt and pepper shit going. Anyway, so I created the strategy for my daughter when she was 9. It had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. Okay, those 5 criteria. I had to figure out a trading strategy specifically for her. Okay? Simple, safe, predictable, consistent, no way for her to lose. So I came up with 5 rules. 5 rules, simple. This is specifically for my daughter, not for you guys. Never trade anything not on the list. That was it. Never trade anything not on the list. Number 2, never sell at a loss. Kind of makes sense, right? Why the hell would you sell at a loss? We're not here to lose money. We're here to make money. Number 1, never buy something not on the list. Number 2, never sell at a loss. Number 3, make sure the company is consistently profitable. It's not coffee. It is ginger tea with honey. Talking so much. I'm not used to talking so much, especially talking at people, not talking to people. You know, conversation is usually 2 ways. But here I'm just reading off the screen what you guys say, and then I repeat it and talking. I'm not used to talking so much, so it's ginger tea with honey. You're new here. If you were here a couple months ago, you'd hear me constantly coughing because, anyway. So, number 1, never trade something not on the list. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Okay, let me touch on that for a bit. I like companies that are consistently profitable. Dividend kings. It's 5 decades, 50 years of consistent increased dividends. What means? It means you can't increase your dividends every year unless you're consistently profitable. Stock goes down, you hold till it goes up. Absolutely. Okay? So the dividend kings have 5 decades of increased dividends, which means if they're profitable, they're consistently increasing their dividends. Number 2, the dividend aristocrats, 25 years. Same thing. You cannot be consistently profitable without increasing your dividends. If you increase your dividends, that must mean you're making more money. Okay? 54 companies, dividend kings. 67 companies, dividend aristocrats. 150 companies, dividend champions. 25 years of increased dividends. Dividend contenders, 300 companies that increased their dividends for 10 to 24 years. For the fun of it, let's throw in Warren Buffett's list. I think that's like 50 to 60 companies there also. Shello. Oh, didn't bring any of anyone else to thought this stock tea party. Okay, Hassan, thank you for that. Not quite sure what you wanted me to do about that one, but alrighty. So, if it's not on the list, don't trade it. That was the advice to my daughter. My advice to you guys, which I tell everyone, if the company's not profitable, if they don't have weekly options, it's going to be an automatic no. No dividends, no thank you. No weekly options, no thank you. And then rule number 5, make sure the numbers work. What does that mean? That's confusing as hell. Well, here it is. If I'm going to buy something, anything, what's the price? Well, currently Archer's at 1075. The closest strike price to 1075 is going to be the 11. And the 11 is selling for 65 cents a share. Well, that's over 5% for the week. So what has to happen? The stock wrong place. Where are we? Right here. Okay. The stock has to stay above 11 before Friday. Well, that's going to be a no for me because look at the chart. Okay, this is part of the numbers. Okay, this is part of the numbers. Here's your bottom right there. What happens at the bottom? Well, people say, hey, it's low. Let me buy some. Great. Then she shoots up. Well, it hasn't been this high before. What does that mean? Well, that means it's at the high. And what happens at the high? People take profits. Think about it. If you bought at 7 and she's now at 10, almost at 11, that's a $4 increase. From 7 to 11, $4. That is over a 55% increase. If you just made 55% in 2 weeks and you don't take the profits, I have no idea what to tell you. It ain't a profit until you take it. And nobody ever went broke taking profits. All right, we're at 52. We're going to reboot. 99 freaking questions. Let's see how many good questions we got here. Barry, Merry Christmas to you and your family. Happy New Year. Thank you, thank you, thank you. Club Med Tom, dude, I haven't heard from you in a while. All right. Would you be able to share tax strategies? How to find a good one? Your best bet is just keep looking. Okay, 86, you're right. ARCH is a monthly. ACHR is a weekly. So he had the ticker symbol incorrect. So anyway, uh-oh. You gotta prove that I'm a real person. Okay, let's do this. Okay, yep. I am in a Roth IRA. You do pay taxes when you withdraw. Yeah, I get that. All right, what do we got here? FOMO. What is FOMO? FOMO. Yeah, no. Is Mara a good covered call stock? Adam, I love Marathon. M-A-R-A. I've done that many times throughout the year. Polestar. Shalon, you actually got to give me the ticker symbol. You give me a company name I never heard of. More than likely, it's going to be a no. That's number 1. Number 2, I don't know what the ticker symbol is. If I don't know what the ticker symbol is, I'm guessing. All right, Adam, Marathon. It's at 20 bucks. Check that out. Holy shit, the $20 strike price is going for $1.14. That's over 5%. But what's the chart telling me? Okay, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Down, up, down, up, down, up, down. It looks like it might be bouncing right here in the last 30 days. PSNY. PSNY. All right, Sean, we'll take a look at it. Big dog. Ticker symbol D. D. Is that DuPont? I don't think it's DuPont, is it? Anyway, we'll take a look. I wrote it down. I'll take a look at it when we get a chance. I got like 30 companies to look at, so it's going to take a while to get there. All right, so let's take a quick look at Marathon. A year ago, we're at 26. High of the year is 34. Bottom of, the high of the year was back in February last year. The bottom was the beginning of September. XRP, hell no. DuPont is DD. Okay, so what's D? Dominion. That's what it is. Dominion. Okay. September 1308. That's the bottom. Look at the last 30 days. Give us a good idea. Where is this puppy going? All right. So Marathon, I like where it is. 30 days ago, we're at 27. We jumped up to 30. Bottomed out Monday. Tuesday was high. Wednesday could be the second day, which means Thursday and Friday might be time to jump in. I love a 30-day bottom, especially on a company that's good. Those are easy ticker symbols to remember. Yeah, they are. But are they profitable, and is it a good one to jump into? So, Marathon's at a 30-day bottom. Is it the 30-day bottom, though? Because tomorrow, it could be lower. I like 2 days to the upside, okay, to isolate a bottom. See here? 1 day to the upside, pull back. 1 day to the upside, pull back. Okay, I want 2 days to the upside before I jump in. So even if tomorrow's an up day, I won't jump in until Thursday or Friday. Well, tomorrow is Thursday. It's a Friday or Monday. So I'm writing Marathon down for Monday. Possible. That one, we'll take a better look at that one on Saturday or Sunday to see what it looks like for Monday. So when I say that, I usually write it down. So now we're below 50, and anytime I go below 50, I I reboot. So you guys are going to reboot. So if you have questions, how to get the dividend calendar, that's on Thinkorswim, which is free on J. The dividend calendar. It is right here under the Market Watch, right under calendar. Okay, on Thinkorswim, which is through Charles Schwab. Best, thank you. All right, you guys, there's no questions. Do you have a YouTube channel? Okay, Dr. Drake, the YouTube channel is right up in the bio. Okay, the 10-minute trader on YouTube. I hear ya. 10-minute trader. Thanks, 86. Hey, 86, I'm about to reboot. Adam, the majority kings would take a lot of capital, wouldn't they? No, not at all. Okay? And you should stick to what you're good at. Okay, Bulkist Axe Gaming. I mean, nobody ever went broke taking profits. All right. We're at 52. We're going to reboot. Yep. How much do I need to make 3,000 a month? 75,000. That was quick, wasn't it? Misty's going to be a no. All right, so we're going to reboot. Let's go this way, and let's do this. Get a third reboot today. That's terrible. Come on, come on, come on. Reboot. Yeah, anytime I drop below 50, I reboot. Why not? I could get the new set of, get some new young blood in there. Okay, so let's change this. Let's go there, and let's go over to here. There we go. So we're rebooting over there. While we're rebooting over there, let's see what's happening over here. Okay, Joe, glad to see you're back. Nothing going on over here, so we're going to do another video over there. Talk about AMC. All right, AMC, Advanced Micro Devices. No. There you go. How you like that? AMD. Okay, Advanced Micro Devices is going to be a no, and here's the reason why. Let's jump on over to Yahoo Finance. Okay. AMD. Okay, Yahoo Finance. Larry Brown, dude, how are you? Back again, nice to see you. AMC, not AMB. Oh, AMC. AMC. Yeah, if we get the stock symbol wrong, if we get the stock symbol wrong, we're going to be looking at the wrong things. No dividends, no thank you. Isn't that weird? No dividends? No thank you. Okay? Dividend investing for cash flow. Info on how to set up dividends. Larry Brown, dude, drop me your number. I'll give you a call. Emrys, Devon, DVN, Devon Energy. I love Devon Energy. Now, Devon Energy, like the other energy stocks, are falling until they find the new bottom. Could be for Devon Energy. So let's take a look. Follow Your Heart, MFIC. Never heard of it. MFIC. Okay, so Follow Your Heart. I will take a look at it. I can't promise anything only because I've never heard of that company. Okay, I've been doing this long enough. I know that it's probably going to be a no because I've never heard of it. None your business. Back again. How are you today? All right, so let's take a look at Devon Energy. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Down, up, and then down. Okay, almost every energy stock has seen the same thing over the last 90 days. Just dropping, dropping, dropping. But look at this one. Now, you're going to make most of your money, okay? This is for all of you. You're going to make most of your money buying low and selling high. Well, Devon Energy is at the bottom of the year. Friday was the bottom. Monday was higher. Tuesday was higher. I'm definitely putting that on my list, but I want to check out something first. Okay, what I want to check out first is I want to check out what does a stock normally do. Now, for those of you who don't know what a seasonality chart is, a seasonality chart tells us how does the stock react based on the calendar. That's it, just the calendar. What do I mean? Well, all the way to the left is January 1st, all the way to the right is December 31st. Now, we're here at the end of the year. The blue line represents the movement that this stock made this year. The red line is 10-year moving average. What does the stock normally do this time of year? Well, this time of year, Devon Energy has a nice spike to the upside. Okay, then to the last week or two, coming down. What's my name? My name's James. Okay, but what does it do in January? Because January is right around the corner. Okay? It goes to the upside in January. What do we do with Coles at this point? Calibri. Hold on a second. I will write that down. We'll take a look at Coles. Actually, I've already have Coles on the list. We'll be looking at it in a little bit. All right. So what is the calendar and what is the seasonality? It's based on the year. Okay? How does the stock react in January, February, March? The first quarter, the second quarter, the third quarter, the fourth quarter. Because in the first quarter, it's the coldest time of the year. What's the ticker symbol? DVN. Yeah, US. The seasonality chart. Winter, spring, summer, fall. Why does Weight Watchers goes up in the first week of the year? Weight Watchers, first week of the year. Think about it. Hershey's, first week of February. Okay, oil stocks have a tendency to go up in April and May, March, April, May. Okay, certain stocks react differently different times of year. Well, how do you take advantage of that? Well, if this stock here has a tendency to go up in the second quarter and then go down in the third quarter, well, why would you be buying it in the third quarter and not buying it in the second quarter? Because a company does the same things over and over and over again. What do you do at Ford? Let's take a look at Ford. John, come on, seriously, O? Have you really looked at the numbers for O? If you really looked at the numbers for O, you would not be asking me about O Realty. Number one, it's a monthly optionable stock, which I tried telling people I don't do monthly optionable stocks. Okay, here's O Realty right here. It's currently at 53. Monthly options. You cannot get weekly options. You cannot get weekly cash flow from a company. Ooh, check that out. Woo, that's cute. You cannot get weekly cash flow from a company that has monthly options. There's a contradiction to terms. Monthly options. Well, there's no weekly cash flow in a monthly options. Seasonality chart. Yeah, you get that. What, for O Realty? Really? You want to take a look at that crap? Look at that. O Realty goes up in the fourth quarter. Nice. It comes down in the second quarter. It goes up in the third quarter. First half. Caden, no. I have Rumble, Twitter, Instagram, Facebook, YouTube, TikTok. I don't know if there's another one in there somewhere. Trading View, no. Okay, somebody asked something about Michael and get your 5%. Michael, what are we talking about? Just use bill. No, hell no. I don't know what the bill is. All right. Don't. Bill. Okay, Michael Magazani. All right, chill. Daniel LaRusso from yeah. Have you seen that dude? It's like, does he age at all? Okay, so Michael Magazani. All right, anyway, Bill, huh? Let's take a look at it. Bill. Okay, what is so glamorous about Bill, Mr. Bill? Currently that's 87.21. The 87s go for 2. The 88s are going for 145. Nice. The numbers look good. Well, Michael, let's see how wonderful this company pays out on dividends. Do they even have dividends? BILL. Okay, see, now, Michael, I got a minor problem. Forward dividend and yield, no dividends. It says it right here, Yahoo Finance. The open, the close, the high, the low, the volume, the average, the market cap, the beta, 5 monthly, PE ratio, blah, 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 all that bullshit. But when it comes over here to dividends, no dividends. Very plain simple. Okay? No dividends, no thank you. I'm not into cash appreciation. I'm not putting my money into a company and waiting for it to go up for me to collect my money. No, when I say I'm retired, it means I need a consistent cash flow. I'm too young to get Social Security, and my Social Security is gonna be what, like $200 or $300 a month? Hell no, ain't gonna work for me. Chill Iker, he's like 60 years old. Is Daniel Russo? Yeah, I know. And if you don't want to tell me, it's okay. I understand. I have no idea what you're talking about, Chill Iker. Okay, I'm 60 years old also. Okay, no. Okay, so anyway. So, no. Bill is a no. Sorry, Michael. If it doesn't work, it doesn't work. Okay? No dividends, no thank you. I'm not looking for capital appreciation. And I'm having a difficult time understanding why people don't understand that. All right. Egon, encourage more viewers. Thank you, Egon. Charlie, can't you just sell a call and roll the call closer every week? Charlie, that's exactly what we do in most companies. What I prefer to do is jump in, jump out, and look for movements when the stock has a tendency to go to the upside. I like going just before the dividend because stocks have a tendency to increase in value just as the dividend's coming into play. So when the dividend comes into play, the stock price goes up. So what's the safest trading strategy there is? Well, safest strategy is buying the stock. That's the safest. but it's not predictable and it's not consistent and it's not profitable all the time. A covered call is where you buy the stock and you sell somebody the rights because it's the premium that I'm collecting. See right here, the premium. Right now the stock's at 87.21. The closest strike price is going to be the 87, 195, or the 88, 145. Both of those are over 1%. I'm looking for a safe, simple, predictable, consistent 1% per week. Okay, Eves wants to take a look at Ford. Ford. Okay, so here we are with Ford. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, sideways, and then down. We're currently at 10.03. The safest trading would be the 10. 17 bucks. That is 1%. I'm going to write Ford down. Now, Ford was my favorite last year. Ford was very profitable for me last year. This year, not so much. Macy's was this year. It's strange. Every year, a different company pays better than the other ones. So Ford is the best one. Was the best one for me last year. This year, it's Macy's. Made a huge amount of money on Macy's. Now, I'm not saying I bought it and then it jumped up. No, it just stayed sideways all year. Buy, sell, buy, sell, buy, sell, buy, sell, buy. Okay, I'm not looking to buy a stock and hold on to it forever and ever. No, I want to jump in, grab my 1%, jump out. It's like being a kid again at the merry-go-round. You jump on, you have your fun, you jump off. You jump on, you have your fun, you jump off. Blah, blah, blah. Same thing over and over again. So Ford, a year ago, we're at 12.46. The high of the year, 14.63. That happened in mid-July. And then, the beginning of August, we hit the bottom, 9.49. But look at from right here. From September all the way up to the beginning of December. Up, down, up, down, up, down, up, down. And then she finally broke out of that trading strategy. The last 30 days, here we go. Here's the last 30 days. 30 days ago was the 30-day high. So what usually happens on a 30-day high? Well, there's usually profit taking. What does that mean? Well, it means the stock went up to a point. It's like, all right, I'm going to take my profits before they disappear. Because that's what people do. You buy it at 9, it jumps up to 10. That's a 10% increase. Fine, take your profit. Okay, when it drops back down again, okay, 11.40, she dropped down to 9.60. Well, great, here's the time to buy. Look, the low was last Wednesday. Thursday was higher. Friday, Monday, Tuesday. That is definitely going to the upside. And great. So you buy the stock, you sell somebody the rights to buy it from you at the exact same price you paid for it, and then you get over 1%. Because right now it's at 10.03. So if I buy it tomorrow morning at 10.03, you know what? Let's do one. Let's actually run through a trade right now on Ford so you see how it's done. It's really not that difficult. Now, I'm going to use Thinkorswim. I don't know what trading platform you use, but I like Thinkorswim. I wrote a book 15 years ago on choosing the right trading platform. Okay? Most of those trading platforms don't exist anymore, but I did write the book on it. I found this trading platform about 20 years ago, and it has everything I'm looking for. And now, I did take a look at E-Trade. I did take a look at something investors. Anyway, I took a look at a lot of them, and I actually, liked this one because it has everything I'm looking for. All right, so let's get rid of this. Let's change this right here. This is the trading strategies right here. It tells you all the different trading strategies there are. I just want to do a covered call. Okay, covered call. It all changes. I want to do the 10. Okay. Here's the calls over this side. Here's the puts over this side. I don't teach the puts here. Okay, now I know how to do them. I know all that fun stuff, but I have to draw the line somewhere. Okay, there's a lot of trading strategies out here. I want to make this the simplest, safest, easiest for everyone. This is a stepping stone. Learn this one. If you get this one down, you can make 50% per year. You can. Doesn't mean you're going to. Most people make the mistakes by hitting the wrong button. saying, hey, I want to buy this when they actually want to sell it. Okay, so the terminology is important. Now, I do have to admit, I hit the wrong button 4 times this year. I think I lost like $4,000 because I hit the wrong freaking button. It happens. I've been trading for 20 years. I do occasionally hit the wrong button. So, always be leery. He thinks that's funny. Okay. That's why I drink the tea. Ginger tea with honey. It's good for my throat. All right, so I want to buy it at the current price, first thing in the morning. So let's actually go through it, and I'll show you exactly how I do it. So I'm changing it to a covered call. So I'm actually buying the stock and selling the option at the exact same time. Now, I'm only going to do one contract. Okay, so you can figure out the math yourself. If you have X amount of dollars, well, you could do 5 contracts. If you have X amount of dollars, you could do 15 contracts. So one contract, let's see what it looks like. Now, I want to do it at the market, which means, okay, it's after hours right now. So first thing tomorrow morning, this order is going to end up on the market maker's calendar, on his screen, and he's going to take a look at the market. Whatever the market's at, that's what I want to buy. Because I am buying the stock and selling the option at the exact time. They're conjoined, they're joined together, which means my profit is already in there. Remember I said simple, safe, predictable. I want to know exactly what I'm making. What the hell did I just do? Okay. Oh, I hit the wrong button. Didn't I just say I hit the wrong button? Uh-oh, I hit the wrong button again. Okay, let's get out of there. One contract. Come on, Jim, let's go. You can do this. There we go. One contract, market order, confirm and send. All right, see, when I say most people lose money by hitting the wrong button, I just did it twice. Okay, laugh it up, fuzzball. All right, anyway, laugh it up, fuzzball. Yeah, it was. Oh, that was a quote from Star Wars. Han Solo said that to Chewbacca. Hey, laugh it up, fuzzball. Anyway. Now, I also encourage everybody, don't just put the order in and send it. Read it out loud so that you can hear yourself what you're intending to do. Because hearing it and seeing it are 2 totally different things. So you ready? Buy 1 covered call on Ford 100s. That is the weekly. That means it expires every week. 3 January 25. That is next Friday. Okay? 3 January 25. That means it expires next Friday. So whoever is going to buy this from me has between tomorrow morning when they pay for it and 3:59 p.m. on the 3rd of January, which is next Friday. So whatever they're going to do, they got to do it between tomorrow, after they buy it, and next Friday. Because after that, it expires. Remember I said 80% of all options expire worthless? Well, that's what I want. I want this to expire worthless, or I want this person who buys it from me to buy it from me. Do I want to own Ford? I'm okay with it, but no, I want the cash flow. How much should we place a buy order for Ford? Now, that's not what I'm saying. Not what I'm saying at all. I'm not telling you to do anything. Okay, I am showing you what I do. Interpret it the way you want. Do your research if it makes it. This is the number 1 takeaway. Everything you see, you should ask yourself one question. Does it make sense? It either makes sense or if it doesn't. If it doesn't make sense, remember, this was created for a 9-year-old. My daughter was 9 years old in 2008. She jumped on my lap and said, Daddy, can you teach me what you're doing? I want to do it too. Well, I wasn't expecting that. So it had to be simple, safe, predictable, consistent, and no way that she could lose. 5 simple rules. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only. And make sure the numbers work. Well, we already checked the numbers. The numbers do work on Ford. Ford isn't weekly optionable stock. Great. It's been in business for over 100 years. We know who Ford is. Well, at least you should. All right, so anyway, buy one covered call Ford 100. The weekly's 3 January 25. That's expiring next Friday. The $10 call option against the Ford stock at the market to open. That means I want to buy the Ford stock. I want to sell the $10 option against it. And then this is what my profit looks like. Well, first of all, my break even. See right here? Break even stock price, $9.84. That means anything over $9.84 is going to be profit. $9.85 is the profit. Not a lot, but it's still profit. It's profit no matter which way you look at it. So $9.84 is going to be the profit. Well, the current price is $10.03. And it's in an uptrend. It had a bottom last week. So the bottom was last week. Now it's going up. 30 days ago, it was at the 30-day high. Then it dropped. Now it's at the bottom. Now it's turning around going back up. That's exactly what I want to buy. I want to buy a good quality company that I know. Everybody knows who Ford is. I can buy Ford at $10.03 a share. You want to hear something cool? Wait a second. Hold on. Hold the freaking phone. Let's go here. Yahoo Finance. If you can't see it, I'm sorry, but this screen here is live on YouTube. I want to go and I want to read you what the book value of Ford is. Statistics right here. Slide down all the way down here. The book value on Ford is $11.15. Okay, you're probably asking, scratching up, what does that mean? Well, you're buying the stock for less than what it's worth. Okay, book value means if the Supreme Court says you got to liquidate and pay off all your investors, well, what are you getting? You're getting the book value, $11 and whatever it was. Okay, look at NVIDIA. The court says that, liquidate. Guess what you're getting? $1.74. The stock is at $140, but the book value is only $1.74. The dividend on NVIDIA, 1 penny. Right? Really? Tell me. Okay, so anyway, break even is $9.84. Great. Anything over $9.84 is going to be a profit. The maximum profit on this particular trade, $16 per contract. I know it doesn't sound like a lot, but hold the phone. Don't panic yet. Let's get the calculator out. Where is the damn calculator? Right, here we go. Now, if my profit is $16 per contract, 16, okay, how do I figure out what my rate of return is? Well, you divide it by how much is it costing? What is the cost for one contract? $984. $984. That comes to a grand total of 1.6% for the week. I'm only looking for 1%. Now, am I going to get Am I going to get 1.6? Probably not, because the stock's at 10.03. I'm selling it at 10. I'm losing 3 cents. So I'm probably going to walk away with a little over 1%, and I'm perfectly okay with that. Sorry, I just had to write that one down because anytime I see a good trade, I write it down. I look at it over the weekend, and if it's good, I'll jump in it on Monday. It's plain and simple. It's that easy. If it's a good company, Ford, okay, you may not like a Ford, okay, but it's been around since the 1900s. Okay, it's over 100 years old. I really don't care about your personal opinion about Ford cars. I don't. The company's been around for over 100 years. General Motors, over 100 years. Okay, so let's get rid of this. Let's get rid of that. Let's get rid of this. Let's go get rid of this. Back to there and back to where we started again. And here we are, back from the beginning. You like that? All right. Ooh, Caden wants to take a look at Intel. INTC. All right. I wrote it down. Take a look. TSCO, Tractor Supply, 2 days up premium 1% per week. Felix, cool beans. TSCO, Tractor Supply. TSCO. Now, I did think I bought this once or twice. Okay, it's at 54. 54.50. Okay, that's right at 1%. Yeah, Felix, I see that. And it's at the right time also. Look at the chart. Remember, there's a couple of things I want to see. All right, number one, is it a good company? Tractor Supply. Well, I know who they are. Okay. What's the premium? Well, right now the stock should be 54.50. Okay, the 54.50 is going for 55 cents. That's over 1%. Look at the chart. Here's the high, here's the low. Look at the movement. Up, down, sideways, down. Right here, she's bouncing off that bottom. That's what I want to see. I want to buy it when it's bouncing off the bottom after a 30-day high. Daddy Warbucks, I really like to learn how to do options from a guy like you. I don't understand it. I understand crypto, margin trading, and leverage, but this is okay. Okay, thank you, I guess. Now, I love seriously, I love the idea of cryptocurrency. Okay, right now it has no track record. Right now it's not accepted openly everywhere. I cannot go to Home Depot and use my crypto to buy some lumber. I can't go to Starbucks and buy a cup of coffee with my crypto. Can't do it without the aggravation of changing this to that. Yeah, no, thank you. And also, with cryptocurrency, I have not found, or nobody has told me, a safe, simple, predictable, consistent strategy to get 1% or more per week without having to sit in front of my computer all day. Now, I'm on my computer trading stocks for about 15, 20 minutes. That's it. Okay, 15, 20 minutes every day. It's about an hour a week. An hour a week to earn the amount of money I earn is freaking ridiculous in my humble opinion. Okay? Once you get over $1,000, $2,000, $3 an hour for your time, yeah, that's ridiculous. Okay? So, Tractor Supply. Low of the year, 42. High of the year, 62. It's only a $20 difference. But a $20 difference on a $40 stock, that's about 50%. Do you trade open or some specific time frame? I open it when the market opens. Okay, I have a morning trading group. Okay, it is a paid service. So people pay to actually watch me trade, and we trade together. And then after that, open to questions. People ask me questions for about 2 or 3 hours, and then we're done. Okay? So 9 o'clock every morning I'm on. I isolate all my trades I looked at last week, brought over this week. We take a look at the new trades. Great, wonderful. 1% a week is my goal. I've been averaging 1% a week for the past 15 years. That's over 50% per year. It works for me. It's okay. Now, let's take a look at Tractor Supply. Here's the low, here's the high, here's where we are. Great. What are we doing? Look at the last 30 days, last 90 days. Down, up, down, up, down, up. This is what I want right here. Your high's there, your low's here. You can only have one high, you can only have one low. What happens after a high? Profit taking. People take their profits, it gets to a point and say, wow, it's damn cheap, let me buy some. Goes up, people take profits, goes back down again. This is where we are. What's going to happen next? Not guaranteed, but usually you hit a 30-day low, it goes up. Profits, up. Profits, up. So usually, hypothetically speaking, it should go up. It should. It's not guaranteed, but it should. Last 30 days, right there. Okay? Sideways for 3 weeks, drops. Here's the bottom. 3 days to the upside. Thursday was the bottom. Friday was up. Monday was up. Tuesday was up. Look at all the space. All this space to the 30-day high. Okay, look at the space to the 30-day low. Almost none. Okay, people are predictable. We do the same things over and over again. I like the 5 days. Monday in, Friday out. That's my goal. So, that's Tractor Supply. What do we want to look at next? Next, going up. Yeah, that's my confusion. You'd be down big if you got called, guessing cover or go again next week. Okay, going up, I'm not quite sure what you mean. Because I have a strategy. And that's the only thing I teach here. Okay, buy a good quality stock. Make sure it's consistently profitable. Okay, don't look for, what do they call that? You're not looking for a swan. I think it might not be the right analogy. I'm not looking to hit a home run. There's a movie called Moneyball with Brad Pitt years ago. Okay, singles, doubles, singles, doubles. Don't go for the home run. You're going for the home run. Most of the time, you're going to strike out. Babe Ruth was the home run king. He was also the strikeout king. Okay, I'm not looking to hit home runs. I'm looking to hit singles and doubles. Unicorn, thank you. Okay, I'm not looking for a unicorn. I'm looking for safety. I'm looking for predictability. I'm looking for consistency. And also, let's throw some simplicity in there also, because it was created for a 9-year-old. Why not sell puts in the wheel strategy? Because TK, you're missing the whole point. It was created for a 9-year-old. Palantir's a no. Sorry. I understand it's a momentum play. Really, I do. I really understand Palantir. I really do. No dividends, no thank you. Simple. Now, TK, why not sell puts in the wheel strategy? Because here's the thing you're missing. This strategy was created for a 9-year-old. Okay? 9-year-old. It had to be simple, it had to be safe, it had to be predictable, it had to be consistent, and there had to be no way she could lose. Try explaining a put and what the pros and cons of puts are to a 9-year-old. I can do it to adults, and some adults don't understand them. They're very confusing if you're in the, no. Okay? Simple, safe, predictable. I treat one strategy and one strategy only. That does not mean I don't do puts. Does not mean that at all. It means here, giving away for free, I use one strategy and one strategy only. Once you get this thing perfected, once you are making 50% every single year consistently, fine, great. Now let's throw in another strategy. I love put selling. I do. But it confuses people who are just getting started. Okay? If you are not making 50% per year, you shouldn't be doing more than one strategy. You should be only doing one strategy until you perfect it. Cash Crow, you just bought 4. Cool beans. Amy, good evening, and how are you today? Uh-oh. Uh-oh, I missed something. Okay, we haven't seen Intel yet. Oh, wait a minute. TSC, I want to write that one down. Okay, Intel, INTC. Now, I do own some Intel, just in case you're wondering. All right, here's the high, here's the low, right here. Okay, she's up, she's down, cool. 2039, the 2050s are going for 43. That's 2%. That's a hell yes for me. It's already on my list. Imagine that, it's already on my list. Okay, so I like Intel. Check this out. Last 30 days right there. This is what I'm telling people I got to say this, I'm going to say it really slowly so I'm not misquoted. In my humble opinion, this is the perfect setup for me. Okay? Uh-oh. I actually put that on record. So let's do that one more time. All right. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. This, in my opinion, is the perfect setup. We're taking a look at Intel, INTC. Here's the high 30 days ago, 25.50. Here's the bottom 3 days ago, just below 19. Okay? 30-day high, 30-day bottom. Once you have your profit taking is done, and people are saying, hey, this is cheap, let me jump back on it. 1 day, 2 day, 3 days to the upside. Okay, what are we looking at? 23.30. The closest strike price is going to be the 2050, and that's going for 43 cents a share. 43 cents a share on a $20 stock. Well, that is over 2%. So let's take a look at one. Let's get rid of this. Let's go on over to covered calls, the 2050, right there. Let's do one contract at the market price. Confirm and send. Here's what it sounds like. Buy one covered call Intel INTC 100s. That is the weekly. 3 January 25. That means this option is going to expire at 3:59 p.m. on the 3rd of January. So whoever buys this option from me is going to need to act or get off the pot, you know what I mean, before next Friday, close of business. The 2050 call option against the Intel stock at the market to open. That means first thing tomorrow morning, this order is going to fill. I am going to buy 100 shares of Intel I'm going to sell one contract against the 100 shares I just bought at the market, and I am going to collect $56.50 per contract. But before we go into that, let's take a look at this. The break-even stock price, $19.93. Well, currently the stock is at $20.39 and in a 3-day upward trend after a 30-day bottom, coming off of a 30-day high. We'll take a look at that again in a second. But 30-day high, 30-day bottom. Now she's turning around and going back up. In my humble opinion, that is perfect for me, for my strategy. Let's keep on keeping on. So the profit on this one contract is $56.50. I know that doesn't sound like a lot, but indulge me a bit as we pull out the calculator. Put in the, right here, $56.50. Okay. Now, to find out my rate of return for the week, because remember, this is a weekly option trade, which means it's going to expire in a week. I'm going to get to that question in a second. Hold up. I take the profit, $56.50. I divide it by the purchase price. So to buy 100 shares of this company, it's going to cost me $1,009. Let's try this again. Divide $1,994.16. Okay, to buy 100 shares. Hit the equal sign, and this is going to be a 2.83% trade. That means I will make 2.83% for 1 week. What does the stock have to do? Absolutely nothing. Because wait a second, hold the phone. It's at 20.39. I'm selling the 20.50s, so the stock has to go up just a little bit. But hold on a second. Let's do the 20s and see what that looks like. So at the $20.50, I'm making 56 bucks, which is 2.38%. All right, so let's get out of this one. Let's change this and let's do the 20. Because at the $20 strike price, the stock doesn't have to do anything. All right, well, let's see what that looks like. And it always comes down to a math problem. Okay, market price. And let's hear what it says. Now, when I say let's hear what it says, because not only do you fingers and eyes, okay, fingers, you're typing it, and your eyes, you're seeing it, hear it. Because most people lose money by hitting the wrong button. So if you say it out loud and you listen to what you're saying, it's going to work or it's not going to work, one or the other. Ready? Here we go. Buy one covered call Intel 100. It's the weeklies. 3 January 25. It's going to expire next Friday, 3:59 p.m. on the 3rd of January. The $20 call strike against the stock Intel at the market to open. That's the order. All right. Well, the break even is 1965. Well, the stock is currently at 2039. So the stock doesn't have to do anything. Stocks only move 3 ways: up, down, or sideways. Nowhere. I hate saying sideways because it goes up, goes down. You know, it can go up and go down and end up at the same place where it started in the morning, but it still goes up and goes down. Anyway, up, down, or sideways. So if I'm making money if the stock goes up, great. If it stays the exact same, goes absolutely nowhere, great. I'm still making the same amount of money. And the stock can even go down a little bit because right now it's at 2039. I'm selling somebody the opportunity to buy it from me at 20. So the stock can go down to 20, but wait, it can go all the way down to 1965. That's the break even. Up, I'm making money. Sideways, I'm making money. Down a little bit, I'm still making money. How can you go wrong with a trade like this? Well, let's take a look. Well, here I'm only making $34.50. All right, well, let's get my calculator out again. Clear. $34.50. And then I divide it by how much is it costing me to do this trade? $1,966.16. That's the exact same amount from the last trade. But what's my rate of return here? My rate of return here is only 1.75. So that's 1 3/4%. It's a safer trade, but it's less money. So here's the question. Do I do the 2050 and make 2.8? Or do I do, or is it 2.3? 2.38? Whatever. Okay. But the numbers, check the numbers. At 2050, the stock's got to go up a little bit. At the 20, the stock doesn't have to move at all. and I'm still making 1.75% for the week. So that's the question. Number one question, always, always, always. Does it make sense? Okay, it either makes sense or it doesn't. Question number two, do I like Ford? Question number three, do I like Ford at this current price? Question number four, can I see myself buying Ford and holding on to it for the rest of my life? Because that's the question you really got to ask. Never buy something unless you're okay with owning it for a long period of time, because you just might have to. Now, when I say a long period of time, the longest I've ever held anything is 9 months. Didn't do it because I wanted to. I bought, hold on, Kimberly Clark, KMB. I bought it, she dropped, hovered at the bottom for a while, came back up. So in the 9 months I held it, I collected 3 dividends and 35 premiums. I made a nice profit off it, even though the stock dropped, turned around, recovered, and got out. Yeah, it's kind of just like the will strategy, but I'm not selling the put at first. I'm just doing the covered call. It's simple, it's safe, it's predictable, it's consistent if you line everything up. 5 rules. Never buy something you don't understand. I understand Ford. I do. Oh, sorry, Intel, sorry. Never sell at a loss. Defeats the purpose. Make sure the company's consistently profitable. Well, Intel's been around for a while. They are profitable. They consistently increase their dividends. Number 4, weekly options. Well, yeah, it's got weeklies. Number 5, make sure the numbers work. And the numbers do work. So do I do the 20s? Do I do the 2050s? Which one? Me, personally, I do the 20s. It's a safer trade. I'm retired. I need the cash flow. Okay, even though the 2.38 or the 2.83, whatever it was, sounds more appealing, it's not as safe. Okay, I like safety, predictability, simplicity, and consistency. I'm retired. I don't feel like going back to work again. Seriously, I don't. All right, that being said, I'm done with this recording. You guys have a great day. Hope you liked that one. That was a good one. I like that. All right, save that. And put that under drafts. All right, so do you re-upload this stream? I need to go to sleep. US, actually, this is being live recorded on YouTube. Okay? This is live recorded on YouTube, so you can just go over to YouTube, The 10-Minute Trader. You'll see all the lives I've done since the beginning of January this year. Okay? And you can see every single one. Same. Vidya, boy. Annie, I would like to join your team and learn more. Annie, how are you today? Most people you start a conversation with, hi, hello, how are you doing? But I appreciate what you say. Give me 1 second. Let's get rid of this. Let's get rid of this. I wrote Ford down for tomorrow, so I'm going to do that. Let's get rid of that. Let's change this back to this right here. Let's go over to here, and we're back where we started. Cool beans. All right, so Annie, you wanted to join? Fine, simple. In my bio, you will see the links to my website. My website would be The 10-Minute Trader. Okay, The 10-Minute Trader right here. You see this big black square right there? Trading live online. It is a live paid-for service that we trade every morning. Okay, 4 days a week, Monday, Tuesday, Wednesday, Thursday. We're on at 9 a.m. Friday, just before the market closes. Just before the market closes on Friday, because I want to make sure everybody, whatever trade you made during the week is going to be profitable. And if you have a possibility of a loss, I want to be able to take a look at it and maybe help guide you. I can't tell you what to do. I'm not going to tell you what to buy. I'm not going to tell you what to do, but I will give you my opinion. Okay? I will take a look at the numbers. I will tell you, well, this is what I would do. I'm not telling you what to do. I'm just saying, this is what I would do. Julian, how are you today? And Da Silver, back again, cool beans. So, that being said, if you want, it's right there. Okay, slide down a little bit. All this should sound familiar. Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. Blah, blah, blah. Okay, kind of fun stuff. Right there, live trading, join our morning trading group. Right there. Okay, anyway. Let's get back to where we were. All right. I will look into it. Thanks. You got it. Marathon. Steven, we already looked at Marathon earlier. Dominoes? I don't think I ever did Dominoes. Isn't D Dominion? Yeah, D is Dominion. Okay, what's Dominoes? Dominoes. DMN? MN? Damon. No. Dominion? No. All right, I don't know what Domino's is. Sorry. TK, yes. I just don't like the wheel. It's not that I like the wheel. I do. But it gets a little complicated. It's not as easy as people make it sound out to be. Okay, Lou White, NVIDIA. Hell no, brother. Have you really checked? Now, you're listening to hype. No, don't get me wrong. You can make a lot of money with NVIDIA. However, what's the downside? The downside of NVIDIA, number one, the book value is $1.74, I think it was last time I checked. The dividend on NVIDIA is 1 penny. You really think that is? Going up, stock drops from 50 to 30. You roll it up, you get target 1% next week. Do you cover it and roll if it rises? Absolutely. Louis, Checkpoint Therapeutics. Louis, you actually got to give me the ticker symbol because I never heard of them. What? That was the first part of my question. MFA. What the heck is MFA? Thanks. Appreciate your channel. Thank you. Axon. I have no idea what Axon is. What exchange do you use? Like E-Trade, for example. Austin, this is Think or Swim. Think. Think or Swim. It is owned by, thank you, Annie. Think or Swim is owned by Charles Schwab. Okay, it got traded back and forth. It was its own entity at one point in time. It got bought out by TD Ameritrade. TD Ameritrade got bought out by Schwab. Schwab is still using this trading platform. They have their own trading platform, but they're still using this also. Strategy works because it's simple and not greedy. I like it. Charlie, that's exactly why I created it. It's simple, safe, predictable, consistent, and it's not greedy. Most people can have a very difficult time getting a grasp on that greed. The greed monster. The little green guy in the show. NVIDIA is a good buy for the next 2 years at least. Laws it down above 200. They dominate AI. Big names need them in the few years to come. Okay, Bulldog, I agree with that. Seriously, I do. Okay, I agree with what you're saying. It's not something I'm looking for. I'm not looking for capital appreciation. I'm looking for cash flow. Now, I've been trading for 20 years. I've seen a lot of shit. I've seen the dot-com burst in the 2000s. I've seen Y2K in the 2000s. I've seen the financial disaster in '08. I've seen the crap in, what was that? When the Iraq wars were. I forget what happened back then. NVIDIA is dominating for the next 2 years. Yeah, Bulldog, I get that. You have fun with it. Okay, the book value is $1.74. $1.74. The dividend is 1 penny. You think that's good? More power to you. Not something I want to do. I'm 60 years old. I don't want to take the risk. Don't. Okay? I do just fine. Okay? I get 1% every single week. That's fine. It's perfect for me. You find what's good for you. I don't like NVIDIA. I don't. But that's me. Luigi, how much are you playing with if you're looking for the 1% profit? Luigi, good question. Let's go here. Now, Luigi, I told you I share 3 accounts, right? Account number 1, 168,000. Account number 2, 190,000. Account number 3, 131,000. Okay, you figure out the 1% from there. Why do I hate monthly dividends? Silky smooth, I said absolutely nothing about monthly dividends. I said I hate monthly options. Okay? Now, a question like that is kind of self-fulfilling. Because if I am looking for weekly cash flow, you cannot get weekly cash flow from a monthly option. Okay? Huge difference. Monthly, 12 times a year. Weekly, 52 times a year. Do the math. Can I get a check every week? Yeah, 52. Monthly, can I get a check every month? Yeah, monthly, once a month. Okay, it just doesn't work for me. It's simple, it's safe, it's predictable, it's consistent. That's what I'm looking for. I don't like monthly options because the numbers just don't work. And, okay, wait a second. Let's take a look. Oh, Realty, everybody loves this piece of crap, okay? Oh, Realty, monthly option, great, cool. Currently it's at $53.24. $53.90 is what I can buy it for. January, the 54, doesn't have a 54, but look at the 55. It's paying 20 cents. That's not even 1%. But if I go 52.50, I lose $1.40. You take $1.40 off of $1.50. The numbers just don't work. And if I'm wrong, I got to hold it longer. Okay? Where do you see? Because if I do a month, I'm going to get 4 to 5%. But they don't offer 4 to 5%. They offer 1 or 2%. So 1 or 2% on a monthly option is 12 to 24% a year. Now, some people may like 12 or 24% a year, but that's not the biggest problem. Okay? Check this out. Here's the last 30 days. Okay? 30-day high, 30-day bottom. She goes up, she goes down. Now she's going back up again. Great. Wonderful. Now, tell me where it's going to be in 30 days. Now, 5 days, I can give you a good idea, because right here, she's probably going to be somewhere around this area in 5 days. Here's your 30-day high, your 30-day bottom. What usually happens? It usually goes up. Well, it goes up. It doesn't go up by much. Okay? So, usually, in 5 days, it should be around 55, probably around 55, 55.50 in 5 days. But where's it going to be in 30 days? It's not as easy to predict where it's going to be in 30 days. 5 days is easy. 30 days, not so much. I don't like monthlies because the numbers just don't work. Trying to figure out where it's going to be in 30 days, just as difficult. I like simplicity. That's why I created it for my 9-year-old. When she was 9, she said, "Daddy, can you teach me what you're doing?" Great. Simple, safe, predictable, consistent, no way for her to lose. It's really not that difficult. Adults, you guys, don't get me wrong. I appreciate you being here. But adults have a tendency to complicate things. It's a simple strategy. Find a good company. Great. Dividend King, Dividend Aristocrat, Dividend Champion, Dividend Contender, Warren Buffett's list. That's over 300 companies right there, consistently increasing their dividend. The dividend is a portion of the profit. The profit is being given back to you. Does your daughter trade? No, she doesn't trade anymore. You kidding? I taught her at 9. When she was 9, she was cute, cuddly, awesome. 9, 10, 11, 12, 13. Oh, fucking 13. What a nightmare. If you have a little girl, 13 to 23, forget it. Okay, you're the devil. Don't even bother. It is easier just put your hand up and put your hand in your wallet and hand it over. It's that much easier. Trying to, no. Sorry, when she turned 13, boys, this, no. Sorry. It is what it is, okay? Most people can't fit their heads around going short and using puts. Yeah, Emerus, I get that. KG, thank you for that. Axon. Okay, Law White, you got to tell me what the ticker symbol for Axon is, because I never heard of them. Good starting budget. Louis G, good starting budget. My grandson started his account with $50, but he's 4 years old. You taking Social Security? No, I'm 60. I don't qualify for Social Security. And I've seen what they're going to give me. Not even $500. You shitting me? What the hell am I going to do with $500? Barely even pays the phone bill. Well, it does, but you know what I mean. All right. In 2 years, 62? I don't know. Thank you. G-Man. Well, G-Man 50% per year is very high. It's average for me. DM Texas. All right. We got 5 minutes left. Now, I always say if we got 200 people or more, I will stay on later. So it looks like I'm going to be staying on later. Pepsi or Coca-Cola? Well, let's do it. Now, I'm going to tell you what I'm looking for. Both companies, Pepsi and Coca-Cola, are both dividend kings. They've both been around for 100 years. They both have increased their dividends to their shareholders for more than 5 decades. They both fit the criteria. Great. One's number 1, one's number 2. Don't kid yourself. Coca-Cola is the number 1 soft drink on the planet. Now, Pepsi is number 2. It is what it is. Don't argue. It ain't worth it. All right, so let's take a look at Coca-Cola. KO. Here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down. Now she's going sideways at 63. Currently at 63. Uh-oh. I missed that question. I have a little girl, and I know what you're talking about. Yeah, Annie, think of it this way. From 13 to like 23, 24, don't try to be her friend. Don't try to be her buddy. Don't try to be anything. Be her parent. Okay? That's it. Put down the rules. This is what it is. Okay? Black, white, up, down, left, right, hot, cold, yes, no. Keep it simple. Okay? Now, my daughter's 26 now. We get along just fine now. All the hormone things are done. You like movies? You see the new Superman trailer yet? No. Haven't seen it yet. All right, so 63. Currently, the 63 is going for 44 cents a share. Now, we all know that 44 cents a share is not 1% of 63. So I think I may have bought Coca-Cola once or twice in 20 years. Annie, I traded options in the past and lost a lot because of bad strategies I was using. I love your strategy. Okay, Annie, if you really want to chat, okay, not here on YouTube, but over on TikTok, or if you can follow my links all the way to my email address, or if you're really good, I mean really good, my phone number is there somewhere. You can send me a text. Okay, depends on how good you are at digging. I put my phone number up there decades ago, and it's still there somewhere in my email. All right, but if you want to chat, I'll give you, we'll chat. Okay, DM Texas, let's take a look. So, Coca-Cola, no, because the numbers don't work. I don't want to buy it and get less than 1%. There are too many other companies giving me more than 1%. So, let's take a quick look at Pepsi. P-E-P. Okay, same thing. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Down, up, down, up, down. Currently at 153. The 152.50s are going from 146 to 187. But I'm losing a buck. Nope, I'm losing 73 cents. We take 73 cents off there, it's no longer 1%. Sorry, it's a weird number, okay? Currently the stock's 153.37. Okay, the strike price 152.50. What's the difference? It's like 73, 74, something like that. Once you deduct that out of that, you're not making 1% in either one. So DM Texas, no to either one. All right, Annie, I'm looking forward to hearing from you. Now, I always tell people, if you really want to talk to me, send me your number, I will give you a call. Okay, I will not send you a video. I will not send you a text message. Because you're hearing me now. There are people out there pretending to be me. When I say I will call you back, you hearing me talk, you should be able to understand when I pick up the phone and I sound the exact same way I am now. Okay, I don't do cryptocurrency, I don't do Forex, I don't do smart contracts, I don't do futures. Dividend stocks, investing for weekly cash flow is the only thing I teach here for free. The only thing, because it needs to be simple. Okay, anyway, Charlie, Laughing Intel trade is already on your board. Yeah, okay. Where were we? Merry Christmas. Pedro, ¿qué pasa, amigo? ¿Cómo está? How do I get rich in one day? Marry a rich person. There you go. What do you think about BlackBerry up 54% this month? Possible dividend in the future. Okay, see, you just answered your question. Possible dividend in the future. Well, that basically means they don't have a dividend now. If they don't have a dividend now, how can they possibly have 20 years of increased dividends? Chopper, okay? If you don't have 100,000 in my account, can we trade how you trade? Well, yeah, you can. You just got to do it a little bit different. What is consistent? What is consistent? 1% every week is consistent. So if I get 1% this week, I got 1% last week, I got 1% the week before, well, that's consistency. 1, 1, 1, 1. That's what consistency is. IONQ, hell no. Check out the numbers, dude, seriously. Craig White, oh, you are new. Okay, Craig White, welcome to the show. Okay, I hate to welcome you to the show and tell you No and no. Okay, now earlier today we looked at VOO. VOO is paying 1.13% per year. That's it. 1.3% per year. Why the hell are you putting your money into something that pays 1.3% per year? Oh, Realty, same thing. I think they pay 1. No. Hold on a second. Let's find out. Go over to Yahoo Finance. Put in Realty. Realty. Okay. Realty Income Corporate. Wait. Realty Income Corporation. 6%. Okay, I was wrong. So Realty is paying 6%. Okay, if you're okay with 6%, more power to you. Now let's take a look at VOO. VOO. 1.22. All right, so VOO is paying 1.22% and Realty is paying 6%. And you're about to explain to me why you think both of those are better than 50% per year. I'm kind of curious. Why would you think either one of those is better than 50% per year? All right. Pedro, got that. Merry Christmas. How do we feel about potential Santa Claus rally? Okay. Eli Lilly paying dividends. Yes, it is. Eli Lilly. I was wondering if I was going to get that right. Now, I don't trade Eli Lilly for one reason and one reason only. $798 a share. So, however much money you think I have, I don't. I cannot buy 1,000 shares at $798 a share. Okay, that's what I usually buy 1,000, 2,000, 3,000 shares. I like to stay under $250 per share because that works for me. $250 per share works for me. It's nice, comfortable. But anyway, let's take a look. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, sideways, up, sideways, down, up. Okay, 798. The 797.50s are going for 965. That's over 1%. But the question is, do you like Eli Lilly? Well, what's she doing the last 30 days? Okay. 30 days ago was the 30-day bottom. She jumps up, pulls back, going up. 1, 2, 3. 3 days to the upside. It's a lot of space going up here. If you like it. Okay, me, it's out of my price range. And that I know. Okay, I know which playground I should be playing in. This one ain't it. But that's me. If you guys can afford almost $800 a share, more power to you. The numbers are there. The numbers are working. Okay, your 30-day high, your 30-day bottom. Now she's going to the upside. What's your highest percentage return? I don't, sorry, Pedro, I really don't keep track of that. Okay. I'll give you a quote by, hold on, Albert Einstein. Okay, quote from Albert Einstein. Somebody once asked him, how many feet in a mile? And Albert Einstein said, well, my dear boy, why would I clutter my head with information that can easily be looked up somewhere? Okay? It's somewhere. Why would I want to keep that in my mind? Because that's history. That's something that already happened. Why would I care about something that already happened? I have no control over it now. My concern is, what am I doing tomorrow? What am I doing next week? That's my concern. I don't look back because there's nothing I can do in the back. Okay? Now I have some Coca-Cola. Larry Brown, cool, if you like Coca-Cola. Siri, I like Siri. Okay, so here's the deal. It is past 11:30. We have 216 people in the audience. As soon as it drops back below 200, I'm out. I always say if we're over 200 at 11:30, I'll stay on. But if we drop below 200, I'm out. So like, share, comment, all that kind of nice, neat stuff. As long as she stays above 200, I'll stay on. I'm kind of curious how long you keep going until it drops below 200. Oh, we're at 208. Let's see what happens. All right. Was that TIK, tick? What's the story with Misty? MSTY? No. Misty doesn't have dividends. No dividends, no thank you. Okay, Trapper, we're going to take a look at, what was that, Siri? SIRI, there it is. Okay, here's Siri. Here's the high right here, 57.50. She bottoms out just a couple of days ago. She's bouncing off the bottom. You're going to make most of your money after the bottom. Buy low, sell high. How often have you heard that expression? Buy low, sell high. Well, the low was just a couple of days ago. So the question is, there it is. It's below 200. So after I'm done with this, I'm done. You ready? So highs here. She drops. Last 30 days. Right there. Okay. 30 days ago, we're at 27. We jumped up to 29. We drop. Here's the bottom right here. 1, 2, 3 days higher than the bottom. That means it's a good opportunity, in my humble opinion. Because when you're looking at a 30-day high, you're going to have your profit taken. It ain't a profit till you take it. Once you take the profit, the stock drops. Now it's going to drop to a point where people saying, hold on a second, Siri is kind of cheap at the moment, let me buy some. So they start buying, and guess what happens? The stock price goes back up again. That's what it does. That's what the stock market is here for. Buy, sell, buy, sell. Well, if you like Siri, great, jump in and buy some. Okay? Now, 2370, the closest one is going to be the 2350, 51. That's more than 2%. That works for me. I like 2%. So TK, Misty, no. No dividends, no thank you. What's the deal with XRP? Too new. Okay? It's not a dividend stock. I can't read that name. Sean. So you have to have money in there a week before the dividend pays to get the payout. Sean, I'm not 100% what you mean by that one. Okay, I'm buying the stock. As it increases in value, I get rid of it. I'm just looking for 1% a week. Okay, if you can't, depending on where you are, where are you coming? So you're coming into the playground. You're coming into my sandbox. What are you coming in with? What are you expecting out of this? Well, for me, I'm expecting 1% every single week. That's what I'm expecting. I'm looking for good quality companies. Is Siri up there? I wouldn't really say it's one of the best companies out there, but if the numbers work and you like it, fine, great. Well, look at it. Here's your 30-day high. Here's your 30-day bottom. What happens at a 30-day high? Profit taking. Stocks go down. What happens with this at the bottom? Accumulation. People start buying again. The stock price goes up. It goes up to a certain point at a certain rate. So either jump in, take the profits, ride the wave, get your 1%. How much you come in with is totally up to you. All right. Why the difference between Misty so high? I have no idea. Misty's a no. Okay. Elise Espinaldo. 1% every week? All right. No. I like to say I average 1% every week. I do. But do I make 1% every week? Well, let's take a look. 2.28. 2.5, 1.77, 3.7, 2.3, 1.6, 0.95. There's your answer right there. Do I make 1% every week? No, I don't. 0.95 right there. Close to 1%, off by a little tiny bit. 1.86, 3.5, 2.6, 3.6, 1.9, 3.6, 8.1, 4.6, 0.7. Okay, didn't make it that week. 0.72, didn't make it that week. Okay, 2.2, 2.01, 1.1, 5.2, 3.3, 1.7, 2.8, 1.5. Here it is, one loss. I lost 0.15, negative 0.15, 1 week. There's 52 weeks in a year. We are in week number 51. Okay, I lost 1 week. I got 6 accounts. I share 3 of them with you. I lost 1 out of all of them. Jesus, how do I learn this strategy? Keep coming every night and you'll learn it. All right, I'm trying to ask, if you never keep your money in there long term, how do you get the dividends paid to you? Okay, Sean, I don't look for the dividends. Okay, you're under the impression I'm trying to collect a dividend. I'm not. Okay, let me show you something relatively quick, see how quick we can make this. All right. Colgate-Palmolive, right here. It has a dividend coming up the 25th of January. All right, sorry, January 25, that's next year. The 21st, okay, right there, Colgate-Palmolive, a 50-cent dividend. 50-cent dividend. That means every 90 days, once per quarter, January, February, March, quarter one, April, May, June, quarter two, July, August, September, quarter three, October, November, December, quarter four. Each quarter it pays 50 cents. Hold tight, check this out. Get rid of that. Let's go here. And it was Colgate-Palmolive. All right, so Colgate-Palmolive at this moment in time is $95.21. The closest strike price to that would be looking at the last price right here was $92.39. We'd be looking at the 93. The 93, damn it, it ain't freaking showing. The 93. Do you see it right there? The 93 call strike means if I buy the stock, sell it to somebody for the exact same price I just paid for it, I will be picking up 90 cents a share. Now, I know I don't have to tell you this, but I'm being recorded, so just for the fun of it, 90 cents per share on a weekly basis is a hell of a lot better than a 50-cent dividend once every 90 days. Colgate, I can do a dividend, I can do a covered call every single week, or I can just buy it and collect a 50-cent dividend. Ask yourself the question, do I want to pay $95 and collect a dividend of 50 cents once per quarter? Or do I want to buy the stock? Funny thing is, whether you're going for the dividend or the premium, it's still the same price, $95.21. But I'm getting 90 cents per share. So I asked the question, 90 cents per share on a premium or 50 cents per share on a dividend? See what I'm talking about? All right, so let's keep on. Ooh, 265. Guys are sharing. Covered calls only. Okay, new me, 3434. Here, for free, every night, yeah. Covered calls only. Here. Okay, now I do have a paid strategy. I do have a paid channel where people actually come and watch me trade. Here, it's all free. You guys get all this information free. I'm not asking you to buy anything. But if you want to trade with me, watch over my shoulder as I trade live every day, well, yeah, that's $100 a month, you know. And you get to do any strategy you want. I do a lot of different strategies there, but here only one. How do I learn your strategy, first-time viewer? Jade! Just keep on coming back. Every night, 9 p.m. However, the schedule is going to change next year, which is, what, 2 weeks? Okay? Now, I was live every single night. For 2024, I missed 6 days. Okay, hold on. Hey, Sean, I get it. What I don't get, you don't care about dividends, then why only limit yourself to stocks with dividends? Ooh, Sean, you're not the only person who's asked me that question. So let me see if I can explain it to you in this manner, Sean. Are you ready? A dividend is a portion of the profits the company gives back to the investors. So, absolute worst case scenario, you got a choice. Buy a company that doesn't pay dividends or a company that does. If and when, it's not an if, it's a when the stocks drop. Okay? Company with dividends, you keep getting cash flow and it increases every single year. Don't kid yourself. Some of these companies are over 100 years old. They've seen World War I, World War II, Korea, Vietnam, stock market crash, the Great Depression, okay? The wars in the Gulf, the oil embargo, Y2K. the dot-com bust, the financial crisis in '08, all the shit, the pandemic, the financial crisis, all that shit. And they're still profitable and they're still increasing their dividends. Worst case scenario, I got a company that consistently pays me more and more and more. That right there is good by itself. But wait a second. Yeah, that makes sense. But what you're missing, Sean, stocks move for two reasons and two reasons only. Reason number one is what is called an unknown reason. Okay, I'll give you a couple examples. Now, when the Exxon Valdez crashed in the northwest of the United States, the stock price plummeted. Did anybody know that was going to happen? No. When the British Petroleum sprung a leak in the Gulf of Mexico, their stock price plummeted. Did anybody know that was going to happen? No. Okay. Steve Jobs died. Did anybody know that was going to happen? Well, we all know it's going to happen eventually, but nobody knew it then. Their price dropped. Apple got sued, paid a huge amount of money. Their stock dropped. 3M had a lawsuit, paid out a huge sum of money. Their stock dropped. These are unknown reasons. Okay? Hurricanes, natural disasters, earthquakes, fires. We don't know they're going to pop up. Hawaiian Electric, they haven't paid out a dividend since the wildfires. Okay? If that's what you want to call them. Okay? I'm a conspiracy theorist, you know. I don't believe what I hear because the facts don't support the bullshit. Okay? If you actually believe a bullet can stop in midair, turn 90 degrees and keep going, and then turn another 90 degrees, pause for a few seconds, and then go forward, you believe that kind of bullshit? Yeah, you keep believing that shit. Anyway, that's the magic bullet theory for those of you who don't know. The Warren report when Kennedy got shot. Yeah, Kennedy got shot by a bullet that stopped in midair, turned, stopped, moved forward a foot, turned again, waited a couple of seconds, and then went forward. You believe that bullshit, you believe anything the government tells you. Anyway, let's get back to what I'm saying. Dividend stocks have a tendency to go up just before the dividend. That's why I use them. Now, without the dividend, reason number two, a known reason. I got off track there for a second. Sorry, a known reason, something we know is going to happen. Well, a dividend, we know when it's going to happen. Earnings report, we know when that's going to happen. Conference calls, anything the company announces ahead of time, we know is going to happen. That we can plan for. That's a known event. We can plan for that. Seasonality, what does that mean? Why does Weight Watchers go up at the beginning of every year? Well, do I have to say it? We all know why. Okay, Hershey stocks goes up the first week of February every year. Why? Well, you have Valentine's Day, you have Easter right around the corner. Okay, oil stocks go up in March and April. Why? Because everybody turns on their furnace about the same time, November, December. So come March, their oil tanks are empty and they got to refill. Refill, you can refill any time of year, but nobody's turning on their oil burner in June, July, August, September, October. No. They turn them on in November. So November, December, January, February, March, they're getting empty, they got to refill. That's why oil stocks go up in March and April. If you take a look at seasonality, stocks react differently in the winter as they do in the summer. It's actually that simple. Okay, so known reason, unknown reason. The reason why I use dividend stocks and dividend stocks only, fall back, yes, that's a great one. But also, I want to know exactly when they're moving. Because, go back to Market Watch, all these little green dots, they all represent companies that are going to pay a dividend. If I like them, okay, what do we have? Lowe's, Dell, Apache, Colgate-Palmolive, Caterpillar, what else was he? Dollar General, Comcast, The Gap, Toll Brothers, a whole bunch of them. Now, I don't trade all these. Pfizer. I don't trade all of them. This is just all the ones that are available. The ones that I personally trade on my personal list. Okay, here's some of them right here. Okay, Pfizer, General Dynamics, AT&T, TD Bank, Verizon, Cisco, Bristol Myers Squibb, American Express, the other Cisco, Nordson, Comcast, USB, Nucor, Fifth Third Bank, blah, 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 blah. Okay, I use the calendar to tell me when to look at the stock because the stocks go up in value just before the dividend. Well, what happens for the other 90 days? I don't know. Okay, do I really want to look every single day to find out what's breaking up, what's doing? No. I want simplicity. I want consistency, I want safety, and I want predictability. I want to know what I'm getting before I even get in. That's why I use dividend stocks. They're predictable. They're slow, they're boring, it's pitiful, it's repetitive, it's monotonous. But it gets me 1% every week, and that 1% every week gives me over 50% per year. And I'm okay with that. 15 to 20 minutes every morning, it's about an hour a week. Okay, if you take a look at my accounts, you got 190 here, 130 here, 160 here. You add them all up together, 1 hour a week. 1 hour a week. The number is insane. I'm getting $5,000 or $6,000 for 1 hour of my time, just trading my own money. Okay, that's why I do it. Now you may not be here at this level, but I'm retired. I've been working since 1973. At some point in time, you're trading your time for money. Great, fine, dandy. But at some point, you're going to retire and you only have 3 opportunities. Only 3. And don't kid yourself. 1, you're going to age out. Your boss is going to say, dude, you're too old, freaking go home, retire. Too old. Because you can't do the same thing 60, 70 years old that you could do in your 20s and 30s. Don't kid yourself. I still play soccer. I'm 60 years old and I still play soccer. The oldest guy on the field, 73 years old, and he still plays soccer. Okay? Okay? But I can't do it the same way I did it when I was in my 20s. Because there's guys on the field that are in their 20s and in their 30s. And yeah, I can beat some of them, but I can't beat all of them. And I can't run so it's a fact. You're going to age out. You're going to get too damn old and they're going to tell you to go home. Number 2, you're going to walk out. You're going to have enough money in your account coming in every single week. You're going to tell your boss, hold on a second, we ready? 1, 2, 3. You can take this job and shove it. I ain't working here no more. You can walk out because you have enough money coming in on a weekly basis to take care of all your bills. Not many people get there. And number 3, nobody likes this one, but it does happen. It's called toe tagging. Okay? People die on the way to work, people die at work, and people die on the way home from work. They don't get to enjoy the golden years. I'm in my golden years. I'm having a freaking blast. Funny thing is, don't kid yourself. I'm still working. I'm just not getting paid for it. You know, I go down and I help my mom out. I'm rebuilding her shed. I'm actually making an art studio there. It's coming out really cool. And then I'm going to help my kids with their houses. And I actually continue working, but I'm not getting paid. So retirement is different for everyone. Some people go fishing all day long. Some people sit on the beach all day long. Me, I like to build stuff. I like to create stuff. I like to do things with my hands. Okay, that being said, let's keep on keeping on. I want to go through the rest of these questions and then we're going to be done. I'm not going to be looking at any more stocks. I'm just going to be answering questions. Okay, Jade, how do I learn the strategy? Keep coming back every night. I'm here going to be every night until the end of the year. At the end of the year, I'm going to change the schedule. I'm not going to do Friday nights and Saturday nights anymore because I haven't gone dancing in a year. I haven't gone to the movies in a year. I haven't gone out for dinner in a year. Well, not sure. I went for dinner the other day because I was in Vegas. Yeah, I went to Vegas the other day. All right, anyway, so let's keep on going. But I did broadcast live from Vegas. ADM. I hate when that happens. I missed all these questions. Uh-oh, here it is right here. Okay, 1% every week. Yeah, I average 1% every week. Okay, Alex Dope. AMD call debit spread. Cool beans. I'm not going to talk about it because I said I only teach one strategy here. What's the weekly cash flow? Brad, weekly cash flow. That means if I put out X amount of dollars, X amount comes back in. If I put in $1,000, I'm expecting to get at least 100. That's 1%. Okay, 100,000 a week. That means I'm getting in 1,000 a week. What number amount are we talking? Okay, Brad, at $100,000, 1% is $1,000. At $1 million, it's $10,000. What do you do for health insurance? I don't. I'm perfectly healthy. I don't take any pills. I'm 60 years old. No medication, no therapy, none of that bullshit. I eat right, I work right, and I take care of myself. If I knew a rich people, we were not here, bro. Amy, what do you mean by this? If we knew a rich people, we were not here. I have no idea what that means, Amy. Little Monk, back again. Nice to see you. How many option contracts do you typically do for a particular Dividend King stock? Hold that thought. Oh, you were joking. Okay. All right. Let's say, hypothetically speaking, Little Monk, if I have 100,000 in account, it's 20%, 20%, 20%, 20%. If the stock is $5, I'm buying a bunch. If the stock is $200, I'm buying less. I like to keep the trades as even as I possibly can. Get in, Andrew, before it goes up 30,000. I have no idea what that means. Mir, SCHD, hell no. Which company? Michael, I have no idea. How does Invesco mortgage work in pay 17%? I have no idea what that means. What stock pays 50%? Michael, you are not listening. Okay? RGTI, we looked at that last week. That's a no. I don't know, Ball. What's 50%, buddy? 50% is half. If I have $100, 50% is 50. If I got $50, half, 50% is 25. Merry Christmas, Cleveland. My coworker keeps questioning his stocks, Pfizer. I like Pfizer. It's a great company. Thoughts on prop funding? It's a great idea, prop funding. It is. Invesco Mortgage, never heard of it. Okay, Mir, SCHD, no. Invesco, never heard of them. What the 50%? Michael, I'm not quite sure what you're talking about. Who is he talking to? Michael, I have no idea. What app? Damon. Can you share stocks with weekly dividends? Okay, TL Travers Designs. Okay, you've been here before. Okay, I've never, ever, ever said a stock paid weekly dividends. I'm talking about weekly stock options. Sean, you were really smart till you said you don't have health insurance. I have no idea what you mean by that. I do have health insurance. I just never used it. Thoughts on SCHD? No. Would I put my money short term? I have no idea who you are, what you are, no idea of anything. I don't tell people where to put their money only because I don't know anything about you. If you really want your opinion, if you really want my opinion, send me your number. I will give you a call. Now, when I say I will give you a call, I'm not going to send you a video. I'm not going to send you a link. I'm not going to send you a text. I will actually pick up the phone and call. Misty is a new stock. They pay out every month. Yeah, I get that. Misty also has no dividends. Or they're too young. One or the other. I forget what it was. But I know it was a no. MSTY. Let's take a quick look at it. MSTY. Okay. Misty is Yield Max MSTR Option Income Strategy. Ooh, let's look at historical data. Okay. What's my favorite stock right now? That would be Macy's. Okay, so they do have a dividend, 308. Let's look at dividends only. Oh, look at that. MSTY. The very first dividend was April 2024. But look at the numbers, okay? 413, 252. That's like cutting it by 50%. What a freaking insult. Imagine that. If I'm going to, let's say hypothetically, I have a company, okay? And I pay you a dividend of $1,000 for 1 month, okay? Next month, I cut it in half. How are you going to feel about that? Good. 413 to 252 to 303 to 233 to 140, 194, 185, 420, 440. Yeah, no consistency whatsoever. 1 year, any company can pay out for a year. It's simple. You get a whole shitload of funding. You attract a whole bunch of people to buy your piece of crap shop. It may be good. I don't know. But they're not consistent with their profits. I'm not looking for something like that. My yield max? No. All right. NVIDIA, please. Okay, Chuch Sabag, NVIDIA, hell no. Reason why I say hell no to NVIDIA, the dividend is 1 penny. No possible way they can increase for 20 consecutive years when their dividend is just 1 penny. The stock is around 130, 140. The book value is $1.74. Hell no. That's a lot of red. Well, Michael, apparently you weren't paying attention. Okay? I sold 20 calls on Macy's at $34 a share. That's over 600 bucks. Bitto, 2 calls at 2.8, that's 10, that's 100 bucks. That was a roll. I rolled it forward. I got 138 per share, 4 shares, 138, 4, that's 550 bucks. AEO, 35 contracts at 16. What's 35 times 16? It's 400 and something. I rolled this one forward, 4 at 30, that's 120 bucks. This one 24 at $45. What's 24 times 45? That's like 500 bucks. Okay, these are all sold, not negative. When I sell something, it's red. When I buy something, it's green. Okay, so red is good. Okay, green, okay, I bought to close 8 shares at 148, blah, 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 okay? That means I spent money. I spent money on the green, I made money on the red. So I don't know what you mean by that's a lot of red. Well, red is a good thing in this context. All right, TXRH, yeah, no. What time do you come? 9 p.m. every night until the beginning of the new year, then we change that. What tab do you get the dividend calendar? Surfer, dividend calendar. It's right up into here, under Market Watch, all the way to the right is the calendar. How are you getting the 90 cents? All right, Jim, I'm not quite sure what you're talking about because I try to answer every single question and I can't answer all the questions as they pop up because you remember I'm running like, I think I'm down to 4 channels now. Okay, Instagram, TikTok, YouTube, and another YouTube. Yeah, so it's like 4. So I can't do them as fast as they come up. So when you ask a question like that, I don't know which you were talking about. All right, do you know any AI tools for chart analysis? I don't use chart analysis. Okay, so here's my chart analysis. Are you ready? High, low, okay, volume. Okay, I squeeze in the last 30 days. Here's the last 30 days. High, low, she went up, she came down, 3 days to the upside. That's my analysis. I don't need AI to tell me there's the high, there's the low, okay? I don't trust computers as far as I can throw them. That's why I write everything down, okay? I've been online since the 90s when dial-up modem, 256K, yeah, that bullshit, where you hear that weird noise on the phone and somebody calls you, get cut off, yeah. I remember all that shit. I don't trust computers as far as I can throw them. I do it all myself. Where do you think the S&P is going? Don't know, don't care. Not on my list. Is this calendar on Thinkorswim? Yes, it is. Is Dollar Tree going out of business? Don't know. We're going late tonight. Yep, we look like the stock grow, blah, 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 dividend like VO. Uh-oh. Michael Johnston. Do you like growth stocks to make money than covering it with dividends like VOO? Double hell no. Dude, you seriously got to look at the numbers and the performance on VOO. Now, the reason you bought it is probably because somebody rammed it down your throat. Say, hey, this is a good company. You should buy it. You should buy it. You should buy it. Hey, look at this. Hey, look at this. Yeah, it's a piece of crap, in my humble opinion. Look at the rate of return that you're getting. Seriously, look at it. Bring it up right here. I like doing this because I feel bad for people. VOO. Okay, Yahoo Finance. This is live on YouTube. You can read it yourself. Take a look at all the maximum dividends. Okay, VOO has been paying a dividend since 2010, 14 years. Okay, look at the numbers. 56, 53, backwards. 54, 57, 58, 69, 57, backwards. 64, 69, 94, 67, backwards. 74, 79, 91, 78, backwards. 81, 88, 98, 90, backwards. 95, 109, 101, backwards. 95, backwards. 88, backwards. 130, 100, 1, backwards. Okay? 2 steps forward, 1 step back. 3 steps forward, 2 steps back. Brother, really, look at the numbers. It's not that great. 9 p.m. Central Time. No, Annie, 9 p.m. Eastern Standard Time. Okay? So I forget who it was that liked VOO. Hell, Johnston, I remember. Johnston, no. Take a look at the numbers. Seriously, what is the yield you're getting on a yearly basis? Wasn't it like 1.3%? Isn't that kind of bullshit? Yeah, no, thank you. All right, I'm just going through the last of these questions and I'm done. AVGO, TSLY, Jimbot, TSLY, you know, it has to do with Tesla? No. Okay, what's my favorite stock? I already said that was Macy's. TSLY. Okay? Monthly. I don't do monthlies. The numbers just don't work. Jim. Okay? I see if I can explain it to you and manage, you'll understand it. AMD. Advanced Micro Devices. We already looked at it. We already said no. Okay? So, Jimbot. TSLY. Monthly. Do you understand the difference between monthly and weekly? 9 p.m. Eastern Standard Time. So, Jim, the difference between monthly, weekly, monthly, there's only 12. Weekly, there's 52. If I'm getting 1 to 2% every option trade, I'm getting 12 to 24% with a monthly. 12 to 24%. If you're okay with that, great. I don't do monthlies, I do weeklies. If I'm averaging 1 to 2%, 52 times a year, well, that's 67 to 120% per year. I don't know. I didn't go to school. I went to school. I didn't go to college. I admit that freely. But I do know that 100% is a hell of a lot better than 24%. Okay? I don't do monthlies. The numbers just don't work. It's actually that simple. It's like a doctor pointing out what's all wrong. Yeah, Larry Brown, it's good. How do we get your ticker watch list? Just keep showing up. My ticker watch list is right here. It's already listed. Where is it? Right there. Okay? Intel, Kohl's, Win, Macy's, Bitto, Lowe's, AEO, Kohl's, I already said Kohl's. Bitto, Macy's, Kohl's, AEO, Win, MPW. They're all there. I share everything. I don't keep anything. I share 3 accounts. I got 6. I share 3. Okay, I got to draw the line somewhere. Okay, let's go back to here. Let's finish up. Think of Swim, AVO, JEPI, hell no. TSLY, no. Okay, Jim, good dividend, yes. Monthly, no. AVGO, we already looked at that one. JEPI, no. Red and green, because Christmas, nope, that's not it either. Do you teach options? I only teach one here for free. It's kind of hard to see. Is there a way to share your screen on a stream? Okay, Ricky Bicky, I just told you, this screen right here is live on YouTube. Okay, the reason why I'm standing in front of the screen, that way I can point out everything. Okay, you cannot really see these numbers on a phone or an iPad. Okay, that is why this is live streaming on YouTube. You can go sit on your comfy couch, your recliner, nice soft cushy chair, grab some popcorn, some beer, wine, whatever you like, and watch on the big screen TV. You know that 80-inch screen TV you got in the other room? Yeah, go enjoy it on there. Actually see it on the big screen. Kind of hard to see. Yep, I got that. Jim, we already talked about TSLY. No. Ooh, CVS, I have some. We'll talk about that later. Another day. I'm past midnight. We passed one. What platform do I use? Georgia, this is Think or Swim. We have to get a shrub program. I have no idea what that is. Tony, send me a link. Tell me what a shrub program is. I'll take a look at it. Thanks. You're welcome. AGO. Yeah, AVGO does have good dividends. Okay, I'm almost done. What, in your opinion, is the best affordable online trading platform? Coco, I wrote a book 15 years ago about picking the right trading platform. It's a 15-year-old book. It's not very much up to date. I haven't done one recently. Don't really have the time. Is the Verizon a good buy right now? It's keep going down. Jags, I don't know. Okay. Craig Shop 2, I have no idea what that is. YS, yay. Shopify, no. It's not 20 years old, dude. Okay, when I say I want 20 years of increased dividends or increased profits, that's me. Whatever you decide, that is up to you. But for me, I want 20 years of increased dividends to the shareholders. Okay, I don't want companies that aren't profitable. It makes no sense to me. I'm not going to put my money into a company that is not consistently profitable. How do you tell if they're consistently profitable? Read the earnings reports, read the annual reports, or go straight to the dividends. If the dividend is a portion of the profits, well, if the profits increase, so do the dividends. Do you use a rule of 40 to evaluate growth stocks? No. Okay, Mike Johnson, what I'm looking for. Good, quality, profitable companies. Are you ready? Hope you got a pen. You ready? Dividend Kings, 54 companies that are consistently profitable, 5 decades. Dividend Aristocrats, 67 companies that are consistently profitable and increase their dividends for 25 consecutive years. Dividend Champions, 150 companies that have consistently increased their dividends to the shareholders for 25 consecutive years. Dividend Contenders, 300 companies that have consistently increased their dividends for 10 to 24 years. And then for the fun of it, we're going to throw in Warren Buffett's list. That's 5 lists. That's over 300 companies that are consistently profitable. Consistently profitable year after year after year. No 1 step forward, 2 steps back, 3 steps forward, none of that bullshit. Year after year, higher and higher and higher and higher dividends. That means a dividend is a portion of the profits. If they're consistently profitable, the dividend's going to get higher. If the dividend's getting higher, they're consistently profitable. Okay? You can go check. We went to a website called FinViz, Financial Visualizations. They tell you how many stocks are available. As of last week, 9,797 companies available any single day to trade. 9,700, but only about 300 have consistently been profitable for more than 20 years. That's what I want. That's me. You pick whatever you want. You want to trade NVIDIA? Fine. You want to trade a Tesla? Fine. You can trade whatever you want. I don't tell anybody what to do. I'm just telling you what I do. Okay? This is what I do. I don't give advice. I read numbers and I give my opinion. I don't do monthlies. That's me. If you want to do a monthly, great. More power to you. Okay? It's probably a good company. You probably can make money off of it. But I don't. I like simple, safe, predictable, consistent. You guys, I think I'm pretty much done. IBM, good company. T. Rowe Price, love it. How many companies meet your criteria? About 300. Say them again. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. You guys have a great night. It is past my bedtime, and I'm going to turn into a pumpkin. All right, and now, MSTR, hell no. Do I like Philip Morris? Yes, I do. All righty, you guys over here on YouTube, you have a great night. We'll see you again tomorrow.